classes organized by Board of Studies of ICAI. Students, I am Alok Garg, and today I will complete Ind AS 1, right? In the last class, my dear friends, we have covered Introduction to Division 2 to Schedule 3, right? So that was Introduction to Division 2 to Schedule 3, where we have covered the universe of Schedule 3 and the important amendments which came on 24th March 2021, right? And friends, then we started Ind AS 1, the first standard in the series of Indian accounting standard, which is on presentation of financial statements. Okay. So many of you have heard about Ind AS 118 also. Ind AS 118 is a new standard which is a converged version of IFRS 18 in India, but Ind AS 118 has not yet been notified. And Ind AS 118 is not applicable to the students who are appearing in May 2026 exams, right? So 118 has not yet been notified in India. Okay. So there are a lot of there are a lot of posts on LinkedIn on 118. So at Google, in Google, there are a lot of kind of material is there. People are talking about 118, but for you guys, Ind AS 1 is relevant, okay, as of now. So Ind AS 1 is on presentation of financial statement. Then in the last class, we have understood that this financial statements under Ind AS, so there are two standards which deals with the presentation related aspects. So one, Ind AS 1, which deals with the presentation of financial statement. And when I say financial statement, it is balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts. But Ind AS 1 refers for the purpose of cash flow statement, Ind AS 1 refer to the Ind AS 7, right? So that way, Ind AS 1 does not cover the format of or the presentation of cash flow statement, and Ind AS 7, Ind AS 7 covers the presentation of cash flow statement, right? Statement of cash flows. So friends, we have two standard which deals with the presentation of financial statement, Ind AS 1 and Ind AS 7 relating to the cash flows. Yes. So we covered these aspects. Yes. Then we started Ind AS 1 and we covered the objective, scope, right? This standard is applicable for general purpose financial statement. So we covered these aspects, okay? So this standard provides structured presentation of financial position, financial performance, and statement of cash flows, right? Then we covered the component of the financial statement, right? Then we covered balance sheet, and we know that Ind AS balance sheet start with the asset side, then equity, then liability. Then balance sheet classification is as per non-current and current. Then there is another classification which is financial and non-financial in nature. Okay. After balance sheet, we have covered statement of profit and loss, which is including other comprehensive income. While we will cover these items in detail. Okay. So we'll cover that item also. Then, my dear friends, what we covered? Then we covered statement of changes in equity, right? So we talked about statement of changes in equity. Okay. Then we discussed statement of cash flows. We discussed statement of cash flows, right? And notes to accounts. Okay. So notes to accounts, which includes qualitative and quantitative information. While all these aspects we have only touched, right? We have not get into detail. We will get into detail for all these aspects also. And notes includes accounting policies and explanatory notes. And there are comparative information which is required for at least 1 year. And friends, most importantly, we have covered the opening balance sheet of the comparative period. We have covered the concept of third balance sheet. You remember we have in the last class in detail, we have covered the concept of third balance sheet, right, Ravinder? In the last class, we have covered the concept of third balance sheet, right? So when an entity applies the accounting policy retrospectively, or when the entities correct prior period errors, okay, or when it reclassify item in the financial statement, then third balance sheet is required. What is a third balance sheet? It is the opening balance sheet of the comparative period. Okay. And friends, I have shown you the Excel file, the calculation computation in Excel file, and I have also shown you the ONGC annual report. Have I shown you the ONGC annual report, Ravinder, in the last class? Yes, where we have covered this in detail. Very good. Great. Yes. Let's move on now let's discuss what are the general features or overall consideration of the Ind AS financial statement, right? If you're preparing your Ind AS financial statement, what are the important aspect which you bear in your mind, which you keep in your mind? So friends, the general features, the first general feature of Ind AS 1 of Ind AS financial statement is presentation of true and fair view and compliance with Indian accounting standard. Presentation of true and fair view and compliance with Indian accounting standard. Friends, there is a rebuttable presumption that if a company, there is a rebuttable presumption, right? So the first general feature, the first characteristics of an Ind AS financial statement is presentation of true and fair view. Presentation of true and fair view and compliance with Ind AS. What does it say? It says that there is a rebuttable presumption, there is a general presumption that if a company will follow all the Indian accounting standard, when I say all means applicable Indian accounting standard, then true and fair view assumed through application of Ind AS, right? Sir, how come we able to know that these financial statements are reflecting true and fair view, right? You are not an astrologer, okay? And you cannot check the health by using some stethoscope, but you are a financial doctor, you are a chartered accountant. You can check the financial health, whether it is reflecting true and fair view or not, whether these financial statements are compliant financial statement or not. You can check it by checking the application of all Ind AS, by checking the application of all Ind AS, right? By checking the application of all Ind AS means if you see the disclosure requirement of Ind AS, if you see the disclosure requirement of Ind AS, and if that financial statement is in compliant with all the disclosure requirements of the applicable Indian accounting standard, you can say that these financial statements are reflecting true and fair view. Okay, my dear friends, there is a para number 16 of Ind AS 1. Para 16 of Ind AS 1. Right? You know what that para 16 says? In our accounting standard financial statement, who talks about the true and fair view? Ravinder or Rachit, please tell me, in our accounting standard financial statement, who talks about that your financial statements are reflecting true and fair view? Management or auditor? Yes, you're absolutely right, Ravinder. Auditor. It is the auditor who writes in its an audit report, which is audit report to the financial statement, that the financial statement of the company is reflecting true and fair view as it is in compliance with all the accounting standard or Indian accounting standard notified under Companies Act, notified under section 133 of Companies Act 2013, right? Notified under section 133 of Companies Act 2013. So in our accounting standard audit report, right, in our audit report of the financial statement under accounting standard, it is the auditor who is talking about true and fair view, and it is the auditor who is saying the financial statements are in compliant with all the Indian accounting standards or all the accounting standard or all the accounting standard. We are talking about AS audit report. But in Ind AS, it is the management who also says that in Ind AS, it is the management who also says that management is giving a statement of compliance in the notes to accounts, right? And it is the management who says that what? That the entity has complied with all applicable Ind AS, and the management has to give an explicit and unreserved statement of compliance with all Ind AS. Explicit and unreserved statement of compliance with all Ind AS, right? All applicable Ind AS. Okay. What is meant by explicit? What is meant by explicit? Means clear cut. What is meant by unreserved? Means unqualified. Unreserved means without any subject to, without any if, but, no. Yes or no. Objective. Objective type question. Yes or no. Right? So para number 16 of Ind AS 1 says that management has to give an explicit and unreserved statement of compliance of all applicable Ind AS, right? Is that clear, my dear friends? Is that clear about the statement of compliance? Yes. So management has to give an explicit and unreserved statement of compliance with the compliance of all applicable Ind AS. Let me show you.
सर
The yes.
सर मैंने आपको एक चैट भेजा है सर प्लीज अनाउंस इन द क्लास
Okay. So friends, there is an announcement from Board of Studies of ICAI, and what they announced, this is that our Board of Studies knowledge portal has restarted. Okay. If you want to interact with us, just follow these steps to join the session on Zoom. Log in Board of Studies knowledge portal with your credentials, then join Zoom May 2027 examination. Okay. Then join Zoom. Okay. So this is the announcement. I am again repeating, our Board of Studies knowledge portal has restarted. If you want to interact with us, you have to follow few steps. You have to join the session on Zoom. You have to log in BOS knowledge portal with your credentials, right? Then you can join Zoom May 2027 exam, and then you can join Zoom, right? Okay. Clear? Okay. Yes. So friends, let me show you the example of statement of compliance which is given in the Board of Studies material. If you see, what is the example? So this example is taken from the notes to accounts of Tata Consultancy Services Limited, right? This is extract from a real life example. And what they write, statement of compliance. These standalone financial statements have been prepared in accordance with Indian accounting standard referred to as Ind AS as prescribed under section 133 of Companies Act 2013, read with the Companies Ind AS rules as amended from time to time. Friends, this section was not required in the earlier accounting standard notes to accounts, but this is a special requirement under Ind AS 1. Para 16 of Ind AS 1 says that the management has to give an explicit and unreserved statement of compliance with all applicable Ind AS in the notes to accounts. Okay, right? And if you apply the applicable requirements of Ind AS, the true and fairness of the financial statement is assumed. Okay. Departure from compliance of Ind AS, right? In extremely rare circumstances where compliance with a Ind AS would be misleading, so it would conflict with objectives set out in the framework, right? Then departure is permissible if regulatory framework requires or does not prohibit. Then specified disclosure required. Friends, related party disclosure. This related party disclosure is covered under Ind AS 24. For example, you are a NBFC and you are into the business of giving a loan to the customers. Okay. Now, the son of a director has taken a loan from this NBFC. Okay. So if this NBFC company has given a loan to the son of a director, whether it is a related party transaction or not, relative of the KMP, yes, relative of the director, whether it is a related party transaction or not, please tell me. Sai Kiran, whether it is a related party transaction or not. Ravinder is saying yes, it is a related party transaction. What about you, Rachit? You can write on the chat box also. You don't need to unmute and answer. Whether it is a related party transaction or not. Yes, Rachit is saying it's a related party transaction. What about you, Sai Kiran? Yes, it will be a related party transaction. Now, this son of a director, right? He has applied for a loan from this NBFC, and NBFC has given a loan to the son of the director on the basis of the profile of him, on the basis of civil rating, civil score, right? And it is on an arm's length basis. When I say arm's length means if some other person would have taken a loan, the same interest would have been charged, the interest which has been charged with the son of a director. Okay. The interest which has been charged with the son of a director. Okay. Now the question is, if it is a related party transaction, Ind AS 24 says that to disclose the related party transaction. And Ind AS 24 also says that you have to disclose three aspects: name of the related party, relationship with the related party, and transaction with the related party. Don't you think if this disclosure would have been made, this son of the director has acted in the capacity of a customer, and the company has not given any undue advantage, any benefit to that son of a director. So don't you think in that case, the privacy, the confidentiality will be breached? And the Reserve Bank of India guidance also says that the Reserve Bank of India The Banking Regulation Act provision also says that you cannot reveal the identity of the customer, or you cannot reveal the transactions with the customer, right? Because he don't want to say that I have taken a loan, probably, right? He don't want to disclose this fact. So friends, in this case, if you will not disclose, you will depart from the compliance of Ind AS 24, but your regulatory framework allow you. Regulatory framework means Banking Regulation Act, RBI provision allows you to depart. So in that case, departure is permissible if regulatory framework requires or does not prohibit, or regulatory framework is silent, for example, right? Then in these kind of circumstances, if it would conflict with the objective set out in the framework, and what is the objective? The objective is confidentiality also, right? So in that case, you can depart from the compliance of Ind AS, and in that case it will be constituted as a compliant financial statement. The only thing is some specified disclosure are required. For example, you have to write that we have departed from one of the provision of Ind AS 24 because one of the relative of the KMP has taken a loan, and due to the confidentiality, since the loan is on at arm's length basis, no undue advantage has been given, and hence due to the confidentiality framework, we are not giving the disclosure of in this aspect as per Ind AS 24. Is that clear? Yes? Very good. Very good. Friends, so first point we have covered, then second point is going concern. What is meant by going concern? Going concern means no concern on going of an entity. Yes, what is meant by going concern? Going concern is a fundamental accounting assumption, right? This you guys have read since class 11. Yes or no? Swanlata, have you read this concept in class 11 or BCom or CA Inter, right? CA Foundation. So going concern is a fundamental accounting assumption, right? So what is meant by going concern, friends? The financial statement has to be prepared on a going concern basis, okay? And management on the reporting date, management has to do an assessment of the entity's ability to continue as a going concern. Entity's ability to continue as a going concern, right? So an entity shall prepare the financial statement on a going concern basis unless entity has to prepare the financial statement on a going concern basis until and unless there are these two situations. What is first situation? Until and unless there is an intention to liquidate or to cease trading. The management intention is to liquidate. The management intention is to liquidate. Management itself is saying that I want to liquidate the business, or management intention is to stop trading. Management intention is to stop trading, right? Or no other alternative except to do so, right? So in these cases, if management itself wants to liquidate, management has stopped trading, or there is no other alternative except to shut down the business, right? So in these cases, the company will not prepare the financial statement as per going concern basis, but otherwise the company will prepare the financial statement on a going concern basis, right? And friends, when management shall evaluate the entity's ability to continue as a going concern, the management will look at the foreseeable future. When you are talking about entity ability to continue as a going concern, you are talking about future. And when you are talking about future, sir, what period of future? Future is infinite. Future is still infinity. So what period? Foreseeable future. What is meant by foreseeable future, my dear friends? What is meant by foreseeable future? Can anyone tell me what foreseeable future means? Foreseeable future means 12 months. Please write down 12 months from the reporting date. So the management has to evaluate from 31st March whether this company will be able to continue its business in the next 12 months from the reporting date till next 31st March. Okay. For example, the entity has a factory. Okay. And this entity is a very profitable entity, huge orders in hand, everything was great. One day, there was a fire in the factory. One day, there was a fire in the factory, and this fire has destroyed the entire assembly line, production line of the factory. This entire factory was destroyed. Entire factory was destroyed. The management does not have any funds, the management does not have a credit line to get the borrowings, or management does not have any funds to restart the factory. To restart the factory, the insurance company has also denied the claim, stating that this fire is due to the fault of the management. Friends, in this case, whether entity has an intention to liquidate? No. Whether entity has stopped trading? No. But is there any alternative left except to shut down the business? Business has already been shut down. Entity cannot restart it because it does not have funds. It does not have borrowings. Bankers are not ready to give them funding. Right? Entity does not have funds. Insurance claim, they are not getting any insurance claim. Friends, in this case, whether the company has any alternative except to shut down the business, yes or no? No, company does not have any alternative except to shut down the business. So in this case, whether company will prepare the accounts on a going concern basis, on some other basis, on going concern basis or some other basis. Friends, at least you have to interact, you have to respond. The more you interact and respond, the more you will learn. Right? This is the beauty of the live classes. And ICI is giving you these interactive classes on free of cost basis, right? So friends, you are getting a chance to interact with the faculty, ask your question, answer. Yes, you're absolutely right, Ravinder. It is on the liquidation basis, not on the going concern basis, right? Okay. So friends, if there is any material uncertainty, then you need to disclose. You need to disclose in case of there is any in case there is any material uncertainty. Okay, like Vodafone Idea Limited. Vodafone Idea Limited disclose in their notes to accounts while they prepare the financial statement as a going concern basis, but they disclose in their notes to accounts that there is a material uncertainty relating to the going concern of the company. They write that our future, while we are running business, we are also generating cash from operations, but our future is depending on the government and the banker, right? So there is a material uncertainty. Their business has not stopped. They have no any intention to liquidate. They have no any intention to stop trading. Right? They are leaving their business. Their business is going on, right? But there is a material uncertainty is there. If financial statements are not prepared on a going concern basis, then you need to disclose the fact, basis, and reason for that. That why the financial statement are not prepared on a going concern basis. First, you have to disclose this fact. Then you have to disclose, if not on a going concern basis, then whether it is on a realizable basis, whether it is on a liquidation basis, right? You need to reflect this fact. And what is the reason why the financial statements are not prepared on a going concern basis? For example, the company does not have any funds, the company does not have any credit line, the insurance claim is also denied, right, to restart the factory. Okay. Let's discuss this question. An entity is engaged in a plastic product manufacturing in a particular area. The entity is a profitable entity and has huge order in hands as on 31st March 2020. As on 31st March 2020. Let's make this 2020 to 2026. Okay. 2026. Okay. So they have huge orders in hand as on 31st March 2026. The government has announced on 31st March 2026 to ban trading and manufacturing of plastic after 30th September 2026. After 6 months. This is the only product in which the company is engaged. Advise the company on going concern aspect as per Ind AS 1. Please tell me whether in this case, the going concern is impacted or not impacted. Whether the company will still prepare 31st March 26 accounts on a going concern basis or some other basis. Other basis means realizable basis, liquidation basis. Yes, what is your answer? Rachit is saying yes, sir, impacted. Ravinder is also saying yes. Ravinder is also saying other basis means liquidation or realizable basis. What about others? What about Swanlata? What about Rohan? What about Sai Kiran? What about Kanhaiya? Guys, what do you say? Please respond on the chat box. Rohan is saying company will prepare accounts as per liquidation basis. Okay. Yes, you are absolutely right. If you see in this case, although neither the company has stopped trading or nor management has an intention to liquidate the entity, but there is no alternative except to do so due to government announcement within 12 months from the reporting period. Hence, there is an impact on a going concern basis, and hence there is an impact on a going concern basis. Okay. Yes, you are absolutely right, Sai Kiran. Yeah, Swanlatha, do you have any question? You have raised hands. Do you have any questions, Swanlatha? Okay, no problem. Yes, moving further, moving further. So we covered this going concern also, right? Then accrual basis, accrual basis. Whether do I need to tell you guys what is meant by accrual basis? Should I explain the meaning of accrual basis and case basis to the chartered accountant? Accrual basis means transaction and events are recognized when they occur and in the period to which they relate. For example, you have made a credit sale of 100 crores. The company has made a credit sales of 100 crores for the year ended 31st March 2026. And the customers or the debtors have paid this 100 crores in the month of May 2026. Tell me whether the sale of 100 crore will come into the P&L for the year ended 31st March 26 or not. The cash has not been received in 31st March 26. Whether the sales will be recorded in the accounts of 31st March 26 or not. Of course, yes, it is on a accrual basis. It is on accrual basis, right? So it has to be recorded whether actual payment or receipt has taken place or not, right? Okay, is that clear? Accrual basis means when the transaction is incurred, when you have accrued the transaction, it has to be recorded. Okay. Then the next feature is consistency. Friends, presentation and classification should be retained unless there is a change in the nature of operation which necessitate other presentation. A standard or an interpretation requires a change. Friends, whatever presentation you have given, for example, books and periodicals, printing and stationery, you have covered it as a part of other expenses. So keep it consistently presenting under other expenses. Don't dilute it. Okay. For example, in the last year, you have shown the printing and stationery expenses. You have taken printing and stationery expenses as a other expenses. This year you decided to show it on the face of the P&L. So no, the presentation and classification has to be retained until and unless there is change in the nature of the business which requires a change, or a standard or an interpretation requires a change, right? Okay. Is that clear? Right. Now, moving further, the next concept is what we have discussed so far. We have discussed statement of compliance. We have discussed true and fair view. What is the features of the financial statement? The financial statement should reflect true and fair view by compliance with all Indian accounting standard. Number two, the financial statement has to be prepared on a going concern basis, except if the entity has ceased trading, the entity wants to liquidate the business, or there is no other alternative except to shut down the business. Then we discuss the concept of accrual basis, right? Then we discuss the concept of consistency. Now, materiality and aggregation. What is meant by materiality and aggregation? If any item which is material, it has to be presented separately. If it has to be presented separately. Okay. Friends, in Schedule 3, Schedule 3 has given, Division 2 to Schedule 3 has given a materiality threshold for the presentation of an item on the face of the, either on the face of the P&L or in the notes to accounts separately, right? You remember the materiality threshold we talked about? You remember that? Anyone who is remembering the materiality threshold I have covered in the last class? Anyone? So Division 2 to Schedule 3 materiality threshold, it was higher of Schedule 3 threshold says that it is higher of Higher of what? Higher of 1% of, higher of 1% of what? 1% of revenue turnover, 1% of income, 1% of total income, right? Or 10 lakh. Very good. Very good, Swanlata. 1% of revenue or 10 lakh, whichever is higher, whichever is higher. Means, for example, the 1% of the revenue comes out at, let's say, 20 lakhs. And 20 lakhs and 10 lakh, what is higher? 20 lakhs and 10 lakhs, which what is higher? 20 lakh is higher. 20 lakh is higher, right? So last year, my printing and stationery expenses was 7 lakh. I have shown it as a miscellaneous expenses as a part of other expenses. This year, my printing and stationery expenses is 25 lakhs. Tell me whether I should show the printing and stationery expenses in this year as separately in the notes to accounts, or should I continue to show this printing and stationery expenses as a part of miscellaneous expenses? I have to disclose this separately. I have to present the expense separately, not on the face of the P&L, but in the grouping, in the notes to accounts, right? In the notes to accounts, we have to show it separately, right? If there is any material item, it has to be present separately. Every company prepare a materiality policy. If it is immaterial item, there are small item. The company is $1 billion company. They have given an advertisement worth 1 lakh rupee, right? They did some charity for 20,000 rupees. They purchase a stationery for 2 lakh rupee. All these are immaterial item. Should I show all these expenses as a part of the notes to accounts? Or can I club it as other expenses or miscellaneous expenses? Yes, I can club it. Aggregate with other items. If item is immaterial, aggregate with other items. Okay. Then offsetting. Friends, what is meant by word offsetting? Offsetting means setting off. Have you heard the word setting off in income taxes? The past year losses can be carried forward and set off from the current year income, right? Or so one, so in the current year, the loss from one head can be offsetted, can be set off from the profit or income from the other head. So what is meant by offsetting? Offsetting means adjusting. Offsetting means setting off an asset or liability or an income or expenditure. Setting off an asset or liability or an income or expenditure. Instead of showing it separately, you have to set it off. For example, asset, liability, income and expenses shall not be offsetted unless required or permitted. Means when you can offset the assets, liability, income and expenses when it is permitted by any Ind AS. Let me give you an example. On few items, the company has a deferred tax asset. On few items, company has a DTA. For example, on provision for gratuity, the company has disallowed and created a deferred tax asset. So, provision for gratuity. The company created a deferred tax asset of 100 rupees. Then there is a depreciation. On depreciation, the company has created a deferred tax liability of 80 rupees. Now, friends, tell me, in the balance sheet, should I present my deferred tax asset 100 rupee, deferred tax liability 80 rupee, or should I offset it? Should I offset this DTA DTL and net DTA of 20 rupee I should present in my balance sheet? Tell me what should be there. Sai Kiran is saying we need to set it off. We need to offset it. Right? Rohan is also saying offset and show 20 rupee as a net DTA. So Ravinder is also saying net presentation. Rachit is also saying net presentation. Rachit is also saying offset. Right? Yes, you are absolutely right. Ind AS 12, income taxes standard, permits you to offset it. You have to offset and you have to show it just 20 rupee as a net DTA. Second example. The company is purchasing, the company is selling a goods to a customer. And that customer is a chartered accountant also. So company is selling goods to a customer who is a chartered accountant, and this chartered accountant is also providing GST services to the company. This chartered accountant is also providing GST services to the company. Now, friends, this company is selling goods worth 1000 rupees to the chartered accountant. The chartered accountant claims 800 rupees to the for the service provided by to the company, right? On the balance sheet date, the company has a trade payable of 1000 rupees and the company has a trade receivable of 1000 rupees and the company has a trade payable of 800 rupees. Tell me whether this transaction can be offsetted or debtors and creditors has to be shown separately with respect to this transaction on the balance sheet. Friends, yes, this transaction has to be offsetted. Why? Because the settlement has to be done with the same party. On a particular date, on a balance sheet date, the company has to receive 1000 rupees, but the company has to pay 800 rupees also, right? Yes, you are absolutely right, Rachit. And the company has to pay that 800 rupees to you. When the company will call you that Mr. Chartered Accountant, can you please return my 1000 rupees? Can you please deposit my 1000 rupees? Then what you will say? You will say yes, or you will say you have to pay my 800 rupees also. Okay, I will deposit 200 rupees, net 200 rupees to you. What you will say, guys? You will say that only. That okay, let me deposit your net 200 rupees. Correct? Correct? Yes? Okay. So you're absolutely right, Sai Kiran. In balance sheet, we can offset it, but in P&L, it cannot be offsetted because it is a sale of goods and it is receipt of services, right? So the GST services, this consultancy services has to be shown as an expenses, but sale of the goods has been shown as a revenue. Okay. So in the P&L, it is not required to be offsetted, but in the balance sheet, it is required to be offsetted. Okay. This receivable and payable so that it will not balloon your balance sheet. Third example. The company has sold goods to the customer and worth 1000 rupees, and it is a secured debtors. When I say secured debtor, what does it mean? This debtor has given a bank guarantee to the company. The debtor has provided a bank guarantee to the company. The debtor has provided a bank guarantee to the company. If the debtor will default, the company will forfeit the company will forfeit the bank guarantee. The company will get the money out of releasing the bank guarantee. Friends, now tell me. So this debtor is secured, but the company is also getting a consultancy services from the customer. But the company has not given any bank guarantee. Right. So the debtors are secured, but the liabilities are unsecured. When I say liabilities are unsecured from the provider from the service provider perspective, right? So he does not have any right. If tomorrow the company will get bankrupt, this bank guarantee will be invoked and the money will be released from the bank. But since it is the creditors are unsecured, so the company is not obligated to pay to the creditors until and unless some money will be left to pay them. Okay. Right? Right? Is that clear? Yeah. So friends, in this case, whether this payable and receivable can be offsetted or it cannot be offsetted. See, the nature are different. One is secured, other one is unsecured. So in this case, it should not be offsetted. Okay. Right? Cannot be. So Manoj is asking, what if the amounts are material or of high values? Doesn't matter, Manoj. So even if the amount is material, for example, deferred tax asset. So deferred tax asset is 100 crores and deferred tax liability is 80 crores. These are material high values. So Manoj, will you offset or will you not offset? You will offset. It is permitted under Ind AS 12. It says that the DT and DTL has to be offsetted and disclosed presented as a net item. Okay. Provision for income tax and advance tax and TDS, whether it has to be offsetted or not. Provision for income tax, which is a liability, and advance tax and TDS, which is an asset. Year on year basis, will you offset or will you not offset, or will you show it separately? You have to offset. You have to offset it. You cannot show it separately. Okay. You are absolutely right, Sai Kiran. Offsetting is based on the concept. It is not on the value of the transaction. You are absolutely right. Amazing. Amazing, guys. Amazing. The way you are explaining, the way you are writing your responses on the chat box, it is quite amazing. Right? I can bless you and I can wish each one of you will secure more than 90% in your FR examination, right? More than 90% in your FR examination. Okay. Yes, sir, at times we will show the debtor balances as a trade receivables less provision for doubtful debt, right? Have you seen this presentation? Have you seen this presentation? Trade receivable less provision for doubtful debt. Have you seen it? Trade receivable 100 rupee, provision for doubtful debt 30 rupee. Net in the balance sheet 70 rupee. Is it offsetting? Is it offsetting? This is not offsetting. This is you are doing a valuation allowance. You are creating a valuation allowance. When you fair value your trade receivables, you found that 30 rupee can gone bad. I will not be able to recover 30 rupee and you created a provision. You created a provision. Okay. So this impairment, this is what? This is an impairment. So this impairment, okay. So creating a provision for doubtful debt, creating a provision for inventory obsolescence, creating these provisions are not offsetting, right? These are the measurement of valuation allowances. Okay. Is that clear? So offsetting is clear, materiality or aggregation is clear, right? Let's move further. Now, comparative information, my dear friends, the company has to give at least 1 year comparative. Okay. The company has to provide at least 1 year comparative, which includes narrative and descriptive information, right? When I say narrative and descriptive information, which means qualitative and quantitative disclosure, okay? If an entity changes the presentation or classification of the item in the financial statement, it shall reclassify comparative amount unless reclassification is impracticable. Friends, last year, the printing and stationery expenses was sitting in the miscellaneous expenses of other expenses. This year, you have shown it separately as a separate line item in your notes to accounts, in your expenses section. So tell me, if you show it separately in this year, the comparative figure, will you show it 0 or will you take it from miscellaneous expenses and whatever number were there, you show that number? Will you reclassify your comparative or not? Yes, you will reclassify. Otherwise, how the reader will read it? Okay, this year your printing and stationery expenses is 25 lakh. Last year it was 0. But this is not the case. Last year it was 2 lakh rupee only. So you have to reclassify the comparative also. And when entity reclassify the comparative amount, it will disclose the nature of the reclassification, amount of each item or class of item which is reclassified, and the reason for the reclassification. For example, what could be the reason? This time, due to the materiality threshold given in division 2 to schedule 3, this expenses was supposed to be presented separately and hence the previous number has been reclassified. Okay. When it is impracticable to reclassify the comparative amount, you are not able to ascertain, identify what was the comparative amount. For example, in a very rare circumstances, let's say you don't have the last year records because there was a fire in the godown of the company where the accounting books were kept. Okay, example. Okay, in that case, the entity will disclose the reason for not reclassifying the amount and the nature of the adjustment that would have been made if the amounts had been reclassified. Sir, यही पता होता तो कर नहीं देते, right? Okay. Yes. Now coming to the structure and content. So friends, we covered this general feature of the financial statement. What are the general feature of the financial statement? The financial statement should present true and fair view in compliance with all Ind AS. Which paragraph number I have talked about, that the management has to give an explicit and unreserved statement of compliance with all applicable Ind AS. Para number 16 of Ind AS 1. You are not required to remember the paragraph. Okay. Para number 16 of Ind AS 1, which requires management has to give an explicit and unreserved statement of compliance with all Ind AS. Going concern, the entity's financial statement has to be presented on a going concern. Management has to evaluate whether the going concern is appropriate in the foreseeable future. What is meant by foreseeable future, Swanlata? Kanhaiya, what is meant by foreseeable future? Foreseeable future. What is meant by that? Sai Kiran, next 12 month, not 13 month, next 12 month. 13 तो हाई राइज फ्लाइट में, हाई राइज सोसाइटी में फ्लोर भी नहीं होता. 12 months from the reporting date. Okay. Okay. Yes, you're right. And friends, the entity shall present the accounts on a going concern basis until and unless, until, okay, no problem, Sai Kiran. Thank you. Until and unless the management has an intention to liquidate or to stop trading, or management does not have any alternative except to shut down the business. Okay. Accrual basis, the transaction has to be recorded when it is accrued. Aggregation in materiality, the material item has to be presented separately, right? And all the immaterial item can be aggregated. Offsetting, the assets and liabilities, income and expenditure can be offsetted if it is permitted by an Ind AS. Okay. Frequency of reporting, it has to be at least for an annual basis. It has to be at least for a year on an annual basis, right? Comparative information. Comparative information has to be given for at least 1 year. Okay. Consistency of presentation. The financial statement, the presentation in the financial statement has to be consistently applied from one period to another. Are you comfortable with this? Yeah. Okay. Let's go to the next concept. Now, after component of the financial statement, balance sheet, P&L, statement of changes in equity, statement of cash flow, notes to accounts, comparative information, third balance sheet, right? After covering these components, we have covered the general feature of the financial statement. Now we are getting into the structure and content, structure and content of the financial statement, right? Friends, talking about the structure and content of the financial statement, the first aspect, see, this Ind AS 1 is a very meticulous standard. It's a very, very detailed standard. It's a very meticulous standard, Ind AS 1. Very meticulous standard, I would say, right? Friends, this standard says that the financial statement has to be clearly distinguished from the other information, right? Have you seen any annual report? Have you seen any annual report? Yes or no? I'm asking, just asking a question. Have you seen any annual report? I'm not saying have you read any annual report. Everybody. Yes. So any of you who have not seen the annual report, my request to them to please see any annual report. Annual report are freely available on the website of the companies. Okay, it is freely downloadable using the Google also, right? Friends, if you look at the annual report, annual reports are very thick document, 300 pages, 400 pages, 600 pages. Whether annual report covers only financial statement or some other reports also. It covers a lot of document. It covers a lot of reports. Okay, for example, corporate governance report. For example, BRSR report. You know what is BRSR? ESG report? Yes, corporate governance report, BRSR report. Then your what else? What else? Corporate governance report, BRSR report, directors report, right? Then MDNA report, CEO speech. Okay, lot of documents, lot of reports are there in the annual report. And the financial statements also, a standalone financial statement as well as consolidated financial statements. Friends, in a thick annual report, are you able to distinguish, are you able to identify which section belongs to the financial statement clearly? Yes or no? या प्रॉब्लम होती है आपको आइडेंटिफाई करने में, या पता नहीं चल पाता कि फाइनेंशियल स्टेटमेंट कहां से स्टार्ट होगा, विच सेक्शन इज अ फाइनेंशियल स्टेटमेंट, वेयर आर द फाइनेंशियल स्टेटमेंट? यू आर एबल टू आइडेंटिफाई, मनोज? यस. रोहन, रचित, या साई किरण, you are able to identify? Very good. It is clearly distinguished, easily distinguished. Friends, this is the requirement which is given in Ind AS 1. It says that in a series of document, in a particular document or in a particular publication, your financial statement has to be clearly distinguished from the other information. Okay. Reporting period. The reporting period has to be at least annually. The reporting period has to be at least annually. If the reporting period is longer or shorter, it has to be explained. When a reporting period can be longer? In which situation a reporting period can be of more than 12 months? Or in which situation the reporting period can be less than 12 months? For example, the company is a newly incorporated company. They have, yes, in the case of first year, they have incorporated in the month of January. So instead of presenting their 3 months accounts, okay, what they can do, they can present their first accounts under Ind AS for 15 months. Okay. So the period is longer. So the company is required to explain this in the notes to accounts why the period is longer. Or the company is into liquidation, right? The company was liquidated in the month of November. So instead of preparing the full 12 months account, the company will prepare the how much accounts? The कितने दिन के accounts? 8 month accounts. 8 month accounts. Okay. Information required. Name of the company in case of any change. The name of the company, and if there is any change in the name of the company, it is also required to be disclosed. Have you seen the word formerly, erstwhile? Have you seen the word formerly? Jindal Steel Limited. If you see the annual report of Jindal Steel Limited, what they write? Jindal Steel Limited, formerly known as Jindal Steel and Power Limited. Formerly known as Jindal Steel and Power Limited. Okay. Formerly known as Jindal Steel and Power Limited. So the name of the company is required to be given. If there is any change, it is required to be mentioned. Whether it is individual financial or group financial, whether it is a standalone financial statement or consolidated financial statement. What is the period covered? If you have seen the financial statement, balance sheet as at P&L for the year ended. Okay. So what is the period covered? It has to be clearly spelled out in the financial statements. Currency. Is it an INR? Is it in US dollar? Right? So name change. Manoj has a question. Sir, for how many years the name change shall be disclosed? Right? So Manoj, as per the provisions of the Companies Act, the name change has to be disclosed for the 2 years. Okay, as per the provisions of the Companies Act. Ind AS is silent about this. In Ind AS 1, for how many period this name change has to be given, it is not given in Ind AS 1, but in the Companies Act it talks about 2 years. 2 years from the date of the change. Okay. And the classic example in the real life example is Indus Towers Limited. Indus Tower Limited, right? So the name of the Bharti Infratel Limited was changed to Indus Tower Limited in the year 2021, and they have given this change name also, formerly known as. They have given this name change for 2 years. Okay, clear? Is it clear in mind or clear from mind? CIM or CFM? Clear in mind or clear from mind? Clear in mind? Okay. Yes. So Sai Kiran, it is for two years. Currency, then INR, dollar, level of rounding. Is it for? So level of rounding, whether the financial statement figures are rounded off in crores, millions, lakhs, thousands. So the level of rounding is also required to be given. The level of rounding is also required to be given. For example, let me show you the annual report, one of the financials in the annual report. Just a minute. I hope my annual report or financials are visible. If it is not visible, let me know. Just hold on for a minute. I'm just opening my slides. Yes. Are you able to see Indigo balance sheet? Are you able to see Indigo balance sheet from the annual report? I've directly jumped to the balance sheet. Yes. Is it visible? Okay. Can you see? They have mentioned whether it is a standalone financial statement or consolidated financial statement. Is it mentioned? Yes. Financial statement. So basically, if you see the financial statements, right? So this section, or this is the audit report. If you see, this section of financial statement is a separate section. It is clearly distinguished. It is clearly distinguished. Okay. This is the audit report. Standalone financial statements. Separate section in the annual report. It is clearly distinguished. And if you see the balance sheet clearly says that the balance sheet as at 31st March 2025. Okay. 31st March 2025. Okay. It is INR, rupees in millions, rupees in millions. So rounding off currency, standalone console, right? And name of the company is also given, Indigo, right? Interglobe Aviation Limited. Okay. So in the financial statement, it is also required to be given. Okay. Yes. Sir, there will be a significant balance in rounding sometimes. Where will that balance to be disclosed? So Manoj, when there is a difference due to rounding off, the difference has to be, kind of you can adjust the difference in other current assets or other current liability, okay? Other income, other expenses, you can do that. So there is no guidance about it. But normally companies do that. Okay. So yes. So are you comfortable with this basic information about the structure and content? Shall I move further? Okay. Now, friends, now we'll discuss one by one the component of the financial statement. How many component of the financial statement are there? How many component of the financial statements are there? 5. Very good. Balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts. While if you see in the complete set of financial statement or component of the financial statement, in under Ind AS 1, the comparative information is also given. That is an information. That is not a component. Okay. And third balance sheet is also given. The third balance sheet is part of the balance sheet. It is not a separate component. Okay. So the third balance sheet concept comes when there is a change in the accounting policy which has to be applied retrospectively, and when there is a correction of prior period errors also. Okay. Now, my dear friends, let's discuss the balance sheet structure and content. Then we will be discussing P&L structure and content. Then we will be covering statement of changes in equity. Then we will be covering statement of cash flow just in 30 seconds. Why I have told we will be covering statement of cash flow just in 30 seconds? Why not for other component? Because Ind AS 1 says that for statement of cash flows, you have to refer Ind AS 7. This is the one line guidance given in Ind AS 1. Okay. Right. You are absolutely right, Swarnlatha and Kanhaiya, you are absolutely right. Yes, my dear friends, standard says that all the balance sheet items in the balance sheet, your balance sheet is required to be bifurcated between current and non-current, right? All the assets has to be bifurcated into current and non-current. Then your equity, liability, the liability has to be bifurcated into non-current and current. Okay. So the balance sheet has to be divided into the non-current and current. The current versus non-current distinction has to be provided, or classify based on liquidity if more relevant, right? If it is on the basis of liquidity, you need to classify on the basis of liquidity if it is more relevant, right? For example, if the company is into liquidation, if the company is not preparing the accounts on a going concern basis, if the company is not preparing the accounts on a going concern basis, whether this current non-current will be relevant? क्या current non-current relevant होगा क्या? This current and non-current will not be relevant. This current and non-current will not be relevant. Why? The going concern you look at in the foreseeable future. Foreseeable future means 12 month. Foreseeable future means 12 month, right? 12 month from which date? 12 month from the reporting date, right? So if it is not on a going concern, means you are not expecting your business to run for the next 12 months, right? If you are not expecting your business to run for next 12 months, it means what? It means there is no criteria, there is no point of disclosing it as a current and non-current, right? Everything is current. Everything is current. So in that case, you will classify on the basis of liquidity. Can you give me any example where Schedule 3 also permits to classify on the basis of liquidity instead of current versus non-current? In case of NBFC companies, Division 3 of Schedule 3, which is not part of your curriculum, Division 3 of Schedule 3 classify your balance sheet items not in the current and non-current. The headings are financial and non-financial. The headings are financial assets, non-financial asset, financial liability, non-financial liability. Okay. Any question here, my dear friends? While I'll discuss this current, non-current in detail, but any question up to this part here? Any question? Everything is clear? Crystal clear? Everything is clear or clear? Clear in mind or clear from mind? Crystal clear? Okay. Ravinder is saying crystal clear. Swanlatha, Kanhaiya, Manoj, Rohan has also said CIM, clear in mind. Very good. Okay. Manoj, very good. Okay. Kanhaiya, Swanlatha, everyone is saying the same thing. Okay. Obligatory or minimum line item on the face of the balance sheet. Friends, you all have studied accounting standard, right? आपने पुराने वाले एएस तो सबने पढ़े हैं ना? You all have read old accounting standard in your CA Inter, yes or no? You have used accounting standard in your, you have also used accounting standard in your audit also, in auditing the company's balance sheet, yes or no? Yes. You have also used accounting standard in auditing the company's balance sheet also, yes. Friends, you know, if you need to prepare the balance sheet financial statement under accounting standard IGAP, will you refer for the purpose of the format of the financial statement? Were you referring only Schedule 3 or you are also referring accounting standard? I am talking about the format. I am talking about the presentation of financial statement. Were you referring only the format for the purpose of the format of the financial statement? Were you referring only what? Schedule 3 or you were referring accounting standard also? So Rohan, there was no accounting standard which was talking about, the format of the financial statement. Even there is an AS1, and you know what is the title of AS1? The title of AS1 is Disclosure of Accounting Policies. And what is the title of Ind AS 1? What is the title of Ind AS 1? Presentation of financial statement. This disclosure of accounting policy is a small section in the notes to accounts, right? So your AS1 is touching only a portion of the one of the component of the financial statement. Notes to accounts is one of the component of the financial statement. Accounting policy is one of the section of the component which is notes to accounts. So AS1 is only talking about a section of the one of the component of the financial statement. But Ind AS 1 is talking about the entire presentation of financial statement, right? So as rightly mentioned by Swanlatha, in our IGAP financial statement, whether we were auditing or we were preparing, we were only referring Schedule 3. Accounting standard we were referring for the purpose of accounting, for the purpose of transaction, for the purpose of treatment, accounting treatment, disclosure, right? But as far as the presentation and the format is concerned, nothing was given in AS1, okay, right? But in AS1 also prescribes what are the minimum line item or what are the obligatory line item in the face of the balance sheet, on the face of the balance sheet. Para number 54. Para 54, para 54 of Ind AS 1, para 54 of Ind AS 1, para 54 of Ind AS 1, it gives you the minimum line item which has to be presented on the face of the balance sheet. Minimum line item which has to be presented on the face of the balance sheet, right? It means, sir, in Ind AS, if we prepare Ind AS financial statement or audit Ind AS financial statement, we have to refer dual guidance. Number one, we have to refer Schedule 3, Division 2 to Schedule 3, and we have to refer Ind AS 1 also. Okay. We have to refer Ind AS 1 and we have to refer Division 2 to Schedule 3 also. Sir, if Of course, we need to refer Schedule 3. Of course, yes. Sir, if any item which is not there in Schedule 3, for example, non-current assets and liabilities classified as held for sale. This item is not there in the balance sheet format of Schedule 3. But this item is there in the para number 54 of Ind AS 1. And the company has a line item which is non-current asset classified as held for sale. Sir, whether we should present or whether it is mandatorily required to present this non-current asset and liability classified as held for sale, or if it is not there in Schedule 3, we can skip that. बताइए, शेड्यूल 3 में अगर नॉन करंट एसेट्स एंड लाइबिलिटीज क्लासिफाइड एज हेल्ड फॉर सेल लाइन आइटम नहीं है, तो क्या मैं उसको स्किप कर सकता हूं? कंपनी के पास वो आइटम है. Answer is no, we can't skip. So friends, we have to see the dual compliance. We have to see the compliance of Schedule 3 as well as Ind AS 1, as well as Ind AS 1. Okay. We have to see the compliance of Schedule 3 as well as Ind AS 1. You remember, we discussed also when there is a, what? We discussed ना? हमने क्या डिस्कस किया था? When there is a conflict between Ind AS Schedule 3, Ind AS and Schedule 3, who will prevail? Who will prevail? कौन प्रिवेल करेगा? Ind AS will prevail. And we also discussed na, if there is any additional requirement in Ind AS, that additional requirement has to be followed, right? Okay. So my dear friends, when you read accounting standard now, so accounting standard starts with, when you read accounting standard, at lot of places the word should or may is used. The word should oblique may has been used. But in Ind AS, at the maximum places the word shall has been used. Instead of should or may, the word shall has been used. What is the difference between this statement and this word and this word? What is the difference? Yes, should or may, it gives a connotation of optional. Shall gives a connotation of mandatory, right? So friends, it is not a optional requirement, it is a mandatory requirement. Para 54 of Ind AS 1 says that an entity shall present minimum line items as on the face of the balance sheet. An entity shall present as a minimum below line items on the face of the balance sheet. Now, I have a question. Biological assets, which is plant and animal. Bharti Airtel Limited does not have any biological asset. They don't have Gai and Bhains. They don't have any biological asset. They are not presenting any biological asset word on the face of their balance sheet. Whether their balance sheet is Ind AS compliant or their balance sheet is not Ind AS compliant. Whether the balance sheet of Bharti is Ind AS compliant or not in Ind AS compliant. It is compliant with Ind AS. It is compliant with Ind AS. Okay. No, so Swanlata, minimum is mentioned. So minimum is mentioned means minimum, not maximum. Minimum मतलब minimum देना ही है ना. So compliant, not compliant. Everybody is saying compliant. You're absolutely right, friends. The standard says that as a minimum, these line item has to be presented. So if the company, when the company will present these line item, when there will be amount, when these line items are applicable to that company, either in the current year or in the previous year. If these line items are not applicable to the company, then why? What is the benefit of just giving this line item, just presenting these line items as current year figure 0, previous year figure 0? So what is the benefit of giving this line item at 0, 0? What is the benefit of giving this line item as 0, 0? Right? So you are not required to provide this line item as 0, 0. You're not required to provide. Right? Clear? Is that clear or clear? Clear है या clear है? I hope it is clear. Okay. I hope it is clear. Yes. Very good. So friends, if that item is there, then only you are required to disclose. Otherwise, you are not required to disclose. Are you able to see my balance sheet? Sorry, balance sheet means balance sheet related slide. Are you able to see my balance sheet related slide? No? Okay. Just a minute. Are you able to see it now? Yes. Okay. So now another example. For example, a company has a biological asset in the last year, but in this year, the company does not have any biological asset in this year. Whether company will present this biological asset or not. Whether company will present this biological asset or not. No item in the current year, but the item was there in the last year. Even if the item is in the comparative year, it is required to be presented. Yes, because it also includes comparative information. Ravinder, it also includes comparative information. So if any of these items is not there in current year, but was there in previous year, it is required to be disclosed. Okay, it is required to be presented, right? As per Ind AS 1, which one of the following item is not required to be shown on the face of the balance sheet? Biological asset, property, plant and equipment, investment property, contingent liability, intangible asset. What is the right answer? Hmm. Everyone has given the right answer. D. D is a contingent liability. Okay. So contingent liability is a off balance sheet item. Contingent liability never comes on the balance sheet. Okay. Yes. Now let's discuss about current assets. Okay. Right. Friends, there are two kind of asset, current asset and non-current asset. So what is a non-current assets? Let's discuss the non-current asset first. What is a non-current asset? An asset which is not current is considered as a non-current. Right. So Manoj, if the financial statements are not in compliance with Ind AS, then auditor will qualify those financial statement. Right. So the what was the first general feature of the financial statement, Manoj? What was the first general feature of the financial statement? That your financial statement should reflect, the financial statement shall present true and fair view. Financial statement shall present true and fair view. Okay. Now, how this true and fair view can be achieved? This true and fair view can be achieved by complying the requirement of all the applicable Indian accounting standard. If the financial statement are not prepared in compliance with Indian accounting standard, then, and you are publishing those financial statement, you are getting those financial statement audited, then what happen? Auditor will qualify those financial statement. Auditor will write that these financial statement are not reflecting true and fair view, as these financial statements are not in compliance with Ind AS. Right? For the internal purpose, for the MIS purpose, whatever way, whatever shape, in whichever manner the company wants to, present, just for the internal purpose, the company wants to prepare and present for the management. So whatever it may be, it is okay. But from the regulatory purpose, filing purpose, from publishing purpose, of course, it has to be a general purpose financial statement in compliance with the requirement of all applicable Ind AS. No, sir, like during the audit, we will refer to interim financial statement. If they are not compliant, then see, in case of interim financial statement you're referring, you must be doing a limited review, LR, right? If you are doing a limited review, okay, and interim financial statement companies are not presenting anywhere, not publishing anywhere, they're not filing anywhere. So what you are doing, you're extracting the information and putting the information in the limited review SEBI results. Okay. But if you are auditing like Tata, like Bharti Airtel, Indus Towers, so they are getting the financial statement audited on a quarterly basis. In that case, what they do, in that case, they prepare the interim audited financial statement. Even in interim audited financial statement, this general feature of the financial statement is required to be followed. They also give this statement of compliance in interim financial statement. So interim financial statement, if it is getting audited, if it is getting prepared, filed, when I say prepared, I mean to say like Infosys. Infosys publish their interim financial statement on their website also, right? So if these interim financial statements are audited, if these interim financial statements are published or filed anywhere, so in that case, it has to be complied with all the requirement of Ind AS. It has to be Ind AS compliant, and if it is not Ind AS compliant, the auditor will qualify. Okay. Or for example, even though if it is a limited review, okay, and the company has not complied with the requirement of any Ind AS for an accounting treatment, and this is material. So even in the limited review report, the auditor can qualify the limited review report. Okay. Clear? Is that clear? Kanaya is asking, sir, do we need to present a line item in the current year if we have a balance in the opening balance sheet only? So you are saying if there is a balance in the opening balance sheet, Kanaya, then you must have a balance in the comparative period, ना? अगर ओपनिंग बैलेंस शीट में नंबर आ रहा है तो करंट ईयर में तो कंपैरेटिव बैलेंस शीट में तो आ ही रहा होगा ना. दैट नंबर मस्ट बी कमिंग इन द कंपैरेटिव बैलेंस शीट ना कन्हैया, बिकॉज लास्ट ईयर क्लोजिंग बैलेंस विल बिकम दिस ईयर ओपनिंग बैलेंस ना. सो इफ इट इज कमिंग इन द closing balance sheet, then you have to give, because of comparative, you have to give this line item. Okay. Yes. Friends, what is the definition of non-current asset? An asset which is not current, an asset which is non-current is not current, right? An asset which is not current is a non-current asset. Very simple definition. Sir, I wish in exam this non-current asset definition will come, right? So an asset which is not current is a non-current asset. Now, sir, what is meant by current asset? What is meant by current asset? So current means an asset where the entity expect to realize the asset or intends to sell or consume it in normal operating cycle. What is meant by operating cycle? Operating cycle means cash to cash. What is meant by operating cycle? Operating cycle means cash to cash. Operating cycle means cash to cash. Okay. What does it mean? It means when your cash will be converted to cash. Let me give you an example. The company has funds. The company went into the market and procured raw material. The company went to the market and procured raw material. Okay. The company procured raw material. Now, this raw material, when inserted into the machine, right, for the purpose of finished goods output, it took around 15 months. So there is a 15-month cycle to process this raw material and convert into the finished goods. So it will take 15 months. Then once the goods are ready, the company will sell the goods to the customer on a credit basis. And normally the credit period is 3 months. So in 15 months, the company was able to manufacture the finished goods, and then company sold the finished goods, and the company was able to collect the money after 3 months from the date of the sale. 15 month is a manufacturing period. 3 month is a sale and the cash collection period. So friends, tell me, in how much period this cash become converted into a cash? Means the cash which you have paid for the raw material, right? In how much time this cash has converted into a cash? 18 months. 15 months time for manufacturing, 3 months for getting converted into a cash, means realizing the cash. So friends, this is known as a operating cycle. This is known as a operating cycle. Okay. This is known as a operating cycle, right? This is known as a operating cycle, my dear friends. Okay. Yes. So if the entity expect to realize the asset or intend to sell or consume it in the normal operating cycle, it is known as a current asset, or it holds the asset primarily for the purpose of trading. DLF Limited, have you heard about DLF? DLF is a listed real estate company, a big real estate company. They developed Gurgaon, right? DLF Limited, DLF Limited. Yes, you are absolutely right. It is the operating cycle and current assets or liabilities for this entity to be 18 months. You are absolutely right, not 12 months, Sankiran. You are absolutely right. Like real estate company, many real estate company, project infra company, their operating cycle, their basis of classification of current and non-current is not 12 months. They are on the basis of operating cycle. Okay? They are on the basis of operating cycle. They are on the basis of operating cycle, right? Now, let's talk about DLF Limited. Yes, operating cycle means, Ravinder, operating cycle means a cycle in the processing of the company, a period in which the company, the money which the company has spent, a period in which the company will collect the money. Okay. After the entire processing, an entire cycle, right from the procurement to the collection from the customer. A cycle of procurement to collection, right, is known as a operating cycle. Okay, right? So Manoj, in this case, if retention value and DLP payment, so Manoj, you are not only looked at the retention value and DLP payment, you are also required to look at that what is my operating cycle of this real estate company. For example, if they are able to, recover the money, or I would say, if they're able to construct and they will get the money in just 3 years, okay, if their operating cycle is, let's say, 2 year or 3 year, so you need to see accordingly. Retention money has to be given after 4 years. Operating cycle is 3 year. In that case, it will be non-current, right? So you have to see your business model. You are not required to see only retention. You have to see the entire business model. Normally in my business, in how much time I will able to generate my cash. As simple as that. Okay. Right. So in your examination, there could be less chances this operating cycle can be called out. Normally, even in real life also, in addition to the, so except few specific industries, people are following 12-month period. Like we at Indigo Airlines are following 12 months period. Yes, so Manoj, time period varies contract to contract, but you have to see the weighted average, the general time period. Okay, right? So for example, there are 3 construction projects which are going on. Example, the company used to deliver the construction of the flats in 2 to 3 years. But there is a specific construction going on. The company was creating India's largest mall. It will take around 8 years. Will you take a operating cycle of 8 years? Of course, no, right? Okay. So friends, the second example is it holds the asset primarily for the purpose of trading. What does it mean? Inventory. It is inventory. Boeing. Boeing manufactures aircraft, and it took a huge time for manufacturing aircraft. Okay. And aircraft is a big asset. So Boeing has hold the aircraft. Okay. But Boeing was not able to sell this aircraft for 5 years. Whether this aircraft will be shown as a current asset or non-current asset. It is an inventory for the borrowing. So it is held for the purpose of trading. So it will be classified as a current asset. Right. DLF. DLF is holding shops, malls, retail complexes, flats, and they are not able to sell these flats for 8 years. What are the nature of these flat? What are the nature of these flat in the balance sheet of DLF? इसका nature क्या है? Inventory. It is inventory. It is inventory. Why? It is held for the purpose of trading. It is held for the purpose of trading. It is held for the purpose of trading. Okay. Right? Trading का मतलब बेचने के लिए. Trading का मतलब बेचने के लिए. Okay. It is held for the purpose of trading. Okay. So friends, in this case, it is known as a current asset. It is classified as a current asset. It will be classified as a current asset. Okay. Right. Third, it expects to realize the asset within 12 months after the reporting period. It expects to realize the asset within 12 months after the reporting period. Right. So if you expect the asset to be realized within 12 months after the reporting period, In that case, it will also be considered as a current asset. Let me ask you a question. The company has given a electricity deposit. The company has given a electricity deposit. Okay. You know electricity deposit? Yes. Have you seen the electricity deposit, the security deposit for the electricity, which is given to the electricity board? Yes. So the company has given an electricity deposit for 5 lakh rupee. This electricity deposit has to be refunded to this company, right? This electricity deposit has to be refunded to the company at the time of surrender of the connection, which is on the discretion of the company. If the company will go surrender the electricity connection, right, the company will get the deposit back. The company will get the deposit back. Okay. My question is, what will be the classification of this security deposit? If tomorrow the company will go and ask for the refund, so if the company will just, so the electricity connection will cut and the electricity board will refund the money to the company. Friends, whether it will be current because it will be receivable on demand, whether it will be a current asset or non-current asset. Why it is not a current asset? Why it is not a current asset, my dear friends? Why it is not a current asset? Tell me. क्यों नहीं है current asset? Why it is not a current asset? Friends, first of all, if you are saying it is a current asset, what does it mean? It means you are expecting to realize this deposit within 12 months. It means you are, so see, Manoj, this operating cycle is a separate concept. Okay. 12 month is a separate concept. Held for the purpose of trading is a separate concept. Okay. So all the concept cannot come at the one place. Either you can consider 12-month period or you can consider operating cycle period. But आप कब बोलोगे? आप कब बोलोगे कि आपने इलेक्ट्रिसिटी कनेक्शन सरेंडर करना है? It means you have decided to shut down the business. It means the going concern is impacted. It means you will not recognize, you will not record, you will not do your accounting on a going concern basis. You will not do your accounting on a going concern basis. It means that, okay, you will not do your accounting on a going concern basis, right? So friends, this electricity deposit will be considered as a non-current asset, right? Non-current asset. Now, so Manoj, you have just snatched the situation which is on my tongue. Sir, what happened if a company has 5 offices? A company has 5 offices, and company knows that I am going to shut down one of my office in 5 months. So if a company has 5 offices and company is shutting down one office in the next 5 months, whether it will impact the going concern of the company? Whether it will impact the going concern of the company? No, it will not impact the going concern of the company. So in that case, if the company will close one of the office in the next 5 months, whether the company will surrender the electricity connection or not? Yes, the company will surrender the electricity connection. And if the company will surrender the electricity connection, the company will receive the money also. The company expect to realize the security deposit within 12 months after the reporting period, within 12 months. So it will be considered as a current asset. In this case, it will be considered as a current asset. But if there is one office only, if there is one factory, okay. So what does it mean if you show it as a current? It means you are going to shut down your business, right? So you have to look at the fact of the case, right? You have to look at the fact of the case. Is that correct? Electricity deposit has to be normally shown as a non-current asset. Non-current asset. Is it correct? Not correct. Kanhaiya, have you understood? Manoj, have you understood? Guys, is that clear in mind or clear from mind? Manoj, is that clear in mind? Where is Manoj? Okay, very good. Sir, how does the electricity board record this deposit, sir? Very good question, Swanlata. So, Swanlata, what is the nature? What is the nature of the security deposit for electricity board? What is the nature, Swanlata? Liability. For electricity board, it is a liability. And you know the concept for the liability is no right to defer settlement for at least 12 months, right? No right to defer settlement for at least 12 months. Okay. So if the customer will come for the purpose of refund, the electricity board has to make a refund. So the electricity board, they don't have any right to defer the settlement for beyond 12 months, right? They don't have any right to defer settlement for beyond 12 months. If the customer will come tomorrow for sending the electricity connection, so they can show it as a current liability. They can show it as a current liability. Okay. Right. Right. Okay. Clear? So guys, it's 8:32 now. Let's have a break and we will start at 8:45. liability side, I'll discuss more and more aspects. So I have just touched upon, since Swarnlata has asked, so I have just touched upon that how the electricity company was showing in their balance sheet. So while no right to defer settlement for at least 12 months was there, so it is seems like it is a current liability, because for them, whenever customer will come, whenever customer will come, they have to refund, right? But the point is, on the balance sheet date, so the kind of business in which they are operating, are they expecting that everybody will come in the next 1 year and for to everyone they have to refund? If they are expecting like that, probably their business will be impacted as a going concern, right? Their going concern will be impacted. You agree or not agree with me, right? If I am into a business where I'm selling goods to a customer for which they have given me a one-time security, if I'm saying that I have to refund all the I have to refund all the money in 1 year itself, within 12 months from the reporting date. So whatever is there, it is complete is my current liability. Then what does it mean? It means that I'm going to return the money to all the customer within 1 year. It means the customer will surrender their connections within 1 year. It means I will not left with any customer at the end of the at the end of the next year. Yes or no? Yeah. So friends, the point is they are going by the substance. They are going by the substance and they are looking at how much portion of the deposit can be refundable in the next 1 year. How much portion will be refundable in the next 1 year, okay, and how much portion is refundable in within 1 year. So they look at the trend, right? So they estimate, and the portion which they believe, for example 5%, they believe 5% connection will be surrendered, okay, they believe. So the deposit pertaining to the 5%, what they will do, they will show it as a current liability, right, in the current liability section, other financial liability. And the deposits, the remaining 95% deposits, they will show it as a non-current liability, because they are not settled in the normal course of operating cycle, or they are not estimated to be paid within 1 year. Because if they will show the entire amount as a current liability, so as per the substance, it seems that they will not have any customer at the end of the first year. Yes or no? Yeah, guys, you agree with me? Can I have your confirmation in the form of yes or no? Can I have your confirmation in the form of yes or no? Yes, Swanlata. Okay, let's complete the current asset part first. So, which asset will be classified as a current asset? So, any asset where it is expected to realize, any asset where it is expected to realize in the normal operating cycle, or within 12 months after the reporting period, or it is held for trading, or the asset is a cash and cash equivalent, or the asset is a cash and cash equivalent. What is meant by cash and cash equivalent? So while we discuss the meaning of cash and cash equivalent detail in day 7, but cash and cash equivalent means a short term. Cash and cash equivalent means a cash, bank balance, and other short term highly liquid asset. Short term highly liquid asset. What is short term highly liquid asset? Which can be converted into a cash within 3 months from the deposit. Within 3 months. Okay. Short term assets which can be converted into a known amount of cash without having a significant risk of change in value. Friends, three conditions for becoming an asset as a cash and cash equivalent. The asset is a cash. Cash is a very simple. Cash means cash, Gandhiji. Or cash means bank balance. Okay. Okay. What is meant by cash equivalent? Means which is equivalent to cash. What is meant by equivalent to cash? Which is short term. Which is short term. Short term means 3 months. Short term means 3 months. Okay. Short term means 3 months. Right. A short-term asset which can be converted into a non amount of cash, non amount, determined amount, non amount of cash without without significant risk of change in value without significant risk of change in value. Short-term asset, okay, which can be converted into a known amount of cash without significant risk of change in value. Let me explain you with the help of an example. A company has purchased shares of listed company. A company has purchased some shares of a listed company, some mutual funds some mutual funds also. So friends, if the company has purchased the shares or the mutual funds from the market, if the company wants to sell these shares or mutual funds within 3 months from the date of investment, can the company do it? Can the company sell? Can the company sell mutual fund or listed company shares within 3 months from the date of investment? Yes. For example, if you have purchased the shares of Reliance, okay, if you have purchased the shares of Reliance, so today you have purchased in the T+1, the shares will be credited in your demat account, and just when it will be credited in your demat account, on the next day you can sell those shares, right? So within 3 days you can sell the shares. Within 3 days you can sell the shares and you can get the money, right? So just forget about the weekends, holidays, okay? But max to max within 5 days you can get the money for sale of shares or mutual funds. That is very clear, right? Okay, okay. Now, so the point is, it is highly liquid, yes. It is short term, within 3 months, yes. But the question is, sitting on today, if you have invested if you have invested 1,000 rupees in the shares of a listed company, do you know how much money you will be received after 5 days? Do you know how much money you will receive? In 2008, I purchased Satyam. Satyam was the branded company. Satyam was the famous company. Satyam was one of the best company at that point of time. I purchased Satyam shares over 200 rupees. And in just 3 days, it became 12 rupee, 11 or 12 rupee. Right. It is not predictable. Right. So it could be higher amount also. It could be lower amount also. Okay. So you don't know how much money I will receive after 3 months, after 2 months, after 1 month, you don't know. And whether this investment, mutual fund and shares, whether there is a significant risk of change in value is there or there is no significant risk of change in value. There is a significant risk of change in value. So hence these mutual fund and shares, while it is a short term, but it is not meeting the definition, it is not meeting the criteria of known amount of cash and having a significant risk of change in and without having a significant risk of change in value. It is not meeting. So it is not a cash equivalent. What is a cash equivalent? Fixed deposit is a cash and cash equivalent, right? A debenture purchased, it is a deposit, it is a debenture purchased, fixed deposit, commercial paper, okay, government securities, okay. If these are without having a risk of significant risk of change in value, okay, and you know how much money you will be received. Bond, you have invested 100 rupee on the bond and you will receive an interest on that bond. There is no change in the principal amount, but you will receive interest. So in that case, what will happen? In that case, my dear friends, in that case, it will be considered as a cash and cash equivalent, provided it has to be deposited for 3 months. So what is a cash equivalent? Any deposits which have a original maturity period of 3 months will be considered as a cash equivalent. Okay. Okay. Clear? Is that clear? So the asset is a cash or cash equivalent unless the asset is restricted from being exchanged or used to settle the liability for at least 12 months after reporting period. Right. Okay. So if it is a restricted asset, bank balance is also like a cash equivalent. Bank balance is cash only. Now, let me ask you a question. Let me ask you a question. The company has declared a dividend. The company has declared a dividend. And what is the rule? When you declare dividend, what is the rule? You have to open a specific bank account, earmark bank account for dividend, and you have to deposit money into their bank account. In that bank account, and from that bank account, you have to transfer, from that bank account you have to transfer the money, okay, from that bank account to the shareholders. There is unclaimed dividend which is lying in the bank account for rupees 5 lakhs as on 31st March 2026. So that is a bank balance. So that dividend account is just like a normal current account. So there is a bank balance which is lying for 5 lakh rupee in that bank account. Is it a cash equivalent or is it not a cash equivalent? Is it a cash equivalent or is it not a cash equivalent? Why it is not a cash equivalent? It is not a cash equivalent, or absolutely right. It is a restricted cash balance, right? It can be used only for the specified purposes. It is used only for the specified purposes. It is not available for free use, and hence it will not be considered as a cash equivalent, right? It will not be considered as a cash equivalent, okay? Right? While it can be a current asset, but it will not be considered as a cash equivalent. Okay, friends, right? So now coming to the current liability, if a liability is settled in the normal course of operating cycle or due to be settled within 12 months of the balance sheet date, right, is known as a current liability. Or this liability is held primarily for the purpose of being traded. The company has issued a debentures and the debentures are getting traded, okay? No right to defer settlement for at least 12 months, and the company don't have any right to defer the settlement for at least 12 months. So these are the examples of current liability. Any liability which is not current is non-current liability. Let me ask you a question. The company has taken a long-term loan. Okay? And this long-term loan is, the company took a long-term loan on 31st March 2025. It is going to be repaid in April 2026. What is the classification of this loan on 31st March 2025? What is the classification of this loan in 31st March 2025? The classification of this loan on 31st March 2025 is non-current liability, right? It is due to be paid after 1 year from the reporting date. Right, Manoj? Okay. So friends, what is the classification of this loan on 31st March 26? What is the classification on 31st March 26? It is a current liability because it is payable within 1 month from the reporting date. So on 31st March 2026, this is a current liability. The company is contractually obligated to pay this amount in the month of April 2026. Now the question is, the company is in the discussion with the bank. Right? The company is in the discussion with the bank. And the company expect the bank will roll over this liability, and instead of paying in April 27, the bank will agree to roll it over for next 2 years also. Okay. So friends, in this case, and the company believe that yes, bank will agree to this terms and condition, and bank will renew that loan as a non-current loan. Bank will increase the credit period of this loan on 31st March 26, whether this liability has to be shown as a current or a non-current. What is your view? Friends, on 31st March 26, whether this liability is current or non-current? Manoj is saying current only, sir. Swanlata is saying non-current. Friends, it will be shown as a current liability. It is shown as a current liability. Friend, doesn't matter. Even though if before approval of the balance sheet, if before approval of the financial statement, right, even though if bank has already agreed after 31st March, but before approval of the financial statement, does not make any difference. On 31st March, the company is obligated to pay within 12 months from the end of the reporting date, right? So as at balance sheet date, The company is obligated to pay. The bank has agreed after balance sheet date, right? The bank has agreed after balance sheet date. So it will be classified as a current liability. But yes, a disclosure will be required that the bank has agreed and this liability has been classified as a non-current liability from the current year. Okay. Is that clear? It has to be shown as a current liability. Okay. Now another example. So the company has taken a loan from State Bank of India. As on 31st March 2026, same loan was from State Bank of India. So company was taken a loan from State Bank of India and company know that this loan is repayable on 31st in the month of April 26. So the company has entered into a loan with ICICI Bank, loan agreement with ICICI Bank. And this April 27, this loan will be taken over by ICICI Bank and this loan will be repayable to ICICI Bank after 3 years. कंपनी ने एसबीआई से लोन लिया, अप्रैल 26 में पे करना है, आईसीआईसीआई बैंक से अग्रीमेंट हो गया, मार्च से पहले ही हो गया. Before 31st March 26, the company has entered into an agreement with ICICI Bank. ICICI Bank will take over this loan in April 26 for a period of 3 years. On 31st March 26, whether this loan will be current or non-current. Manoj is saying still current. You are absolutely right. Towards State Bank of India, my liability is current. I have not agreed with State Bank of India before 31st March. Right? I have not agreed with State Bank of India before 31st March. I have entered into an agreement with ICICI Bank that you will take over this loan. But for State Bank of India, my liability is current. Right? My liability is current. Okay. So it will be a current liability. But what happened? Again, third example. I have taken a loan from State Bank of India and State Bank of India before 31st March 26 agreed to defer this liability for next 1 year. Then whether it will be current or non-current liability? It will be a non-current liability in this case because they have already agreed now. They have already agreed that we will defer it. Okay. Yes. Inventory or trade receivables of Pluto Limited are normally realized in 15 months. Should Pluto Limited classify such inventory or trade receivables as current? Yes, it has to be classified as current. Okay. Yes, any question, my dear friends? So this standard is a presentation of financial statement. This is a theoretical standard, right? Not very practical questions are there, but these are the real life example which I am taking with all of you. Let me know if you have any question, my dear friends. Let me know if you have any questions. Do you have any questions? Yeah. Any question? Aruna, if you have any question, Ravinder, Rachit, Sharita Reddy, Rohan, Manoj, Kanhaiya, Swanlata, Sai Kiran, do you have any question? Guys, can you please confirm? Sir, DTL as per Ind AS 12 has to be shown as non-current asset or non-current liability always. Rohan, para 56 of Ind AS 1 says that, which paragraph, Rohan? Para number 56 of Ind AS 1 says that deferred tax asset and deferred tax liability will always be a non-current, right? So thank you, Rohan, for highlighting this. Friends, in case of this current and non-current classification, there is a para number 56 of Ind AS 1 which says that deferred tax asset and deferred tax liability will always be shown as a non-current asset and non-current liability. That is why even in the Schedule 3 format, you will see that this DTA DTL is coming under non-current asset and non-current liability. It is not part of current asset and current liability. Okay. Right. Now let's come to the statement of profit and loss. Okay. Statement of profit and loss. Now let's discuss statement of profit and loss. What is this statement of profit and loss? Let me discuss with all of you with the help of the real life example. I hope my Excel file is visible to all of you. Is it visible, my dear friends? Yes, is it visible? Great. This is my statement of profit and loss for the year ended 31st March 2026. This is revenue from operations. ₹1,000 or 1,000 lakhs, whatever. Other income is ₹200. Total income is ₹1,200. There is an employee benefit expenses, other expenses, impairment, depreciation, finance cost. So these are the expenses which are given. Okay. Then there is a total expenses, and then there is a profit before tax and other items. Okay. Profit before tax and other items are there. Friends, I believe you guys have seen this kind of P&L. You guys have prepared this kind of P&L. The revenue is there, or other income is there, total income is there. Then there are certain expenses. Then there are total expenses. Then there are profit before tax and other items also, right? My dear friends, in Ind AS 1, like in balance sheet, minimum line item were given. In paragraph number, if my memory serves me right, paragraph number 82 was there. So in Ind AS 1 also, minimum line items are there in the P&L format also, right? Obligatory line item on the face of statement of profit and loss. There is a minimum line item on the face of the profit and loss, which is revenue, finance cost, impairment, share of profit or loss of associate and JV, tax expense. Okay. So these are few items which is given as a minimum line item on the face of the P&L. Not maximum, minimum. इतना तो देना ही है. Okay. Okay. So first of all, Ind AS 1 provides you minimum line item on the face of the P&L. Second, you remember we have discussed while discussing the overview and roadmap for implementation of Ind AS, I have discussed the removal of option, where I have discussed the classification of expenses in the P&L on the basis of nature-based classification or function-based classification. You remember we have discussed that? The classification on the basis of nature-based or function-based. Yes. We discussed the classification basis nature and function. हमने डिस्कस किया था ना इन IFRS the nature based and function based classification both are allowed, but in Ind AS only nature based classification is allowed. Okay, so this classification is a nature based classification. Right? So if I need to prepare a notes, right, if I need to prepare a notes relating to, should I prepare the notes for all of you? Statement of P&L, Ind AS 1. आपके लिए नोट्स बनाऊं या रहने दूं? सर इतनी अच्छी बात आप कर रहे हो, फिर आप कह रहे हो बनाऊं या रहने दूं, right? Notes relating to statement of profit and loss. So nobody has told me anything. So should I remove it or should I make a note? Should I prepare notes? Okay. Yes. So first, Ind AS 1 prescribes minimum line item on the face of statement of P&L, on the face of statement of P&L. Ind AS 1 prescribes minimum line item on the face of the P&L, right? So it prescribes the minimum line item on the face of the P&L. Okay. Then my dear friends, then second, Ind AS 1 allows only nature-based classification in the nature-based classification of expenses in the P&L. Nature-based classification of expenses in the P&L. Number three. Okay. So number 3 will come later on. Now, there is a profit before tax and other item. Then there is a extraordinary item, exceptional item, and prior period item. Friends, in our IGAP P&L, in our accounting standard P&L, this prior period item was required to be disclosed separately. this prior period item was required to be disclosed separately on the face of the P&L. If a company found, oh, we made an error 5 years back, if a company detect or identify any error which was made in the past, what the company do? The company take the impact of that error in the current year P&L as a separate line item known as a prior period item. What about Ind AS? In Ind AS, whether this separate prior period line item is required to be disclosed? Manoj, whether it is required to be disclosed? In the last class, I have told you guys about third balance sheet concept. Why that third balance sheet concept came into the picture? Because if the company wants to correct the prior period error, the company is not required to show this line item, prior period item, as a separate line item. The company has to restate the comparative period. The company has to prepare the third balance sheet, which is opening balance sheet of the comparative period, right? हमने डिस्कस किया था या नहीं किया था? ये सुना सुना लग रहा है या सुना सुना लग रहा है? Is it something which is heard or is it something which is blank? Yes. And even Swanlata, you have a question, right? You had a question about passing a journal entry, right? आपने यही क्वेश्चन पूछा था ना? Yeah? Yes. So tell me, anyone please anyone please unmute yourself. Swanlata, please unmute yourself and let me know whether this prior period item, separate presentation of prior period item in Ind AS is required. Please unmute yourself and answer my question if you can. Yeah? No, it is not required. It is prohibited. Why, sir? Why it is not required? In Ind AS, the treatment is very stringent. You have to restate your comparative. You have to give the opening balance sheet of the comparative. Okay, BOS is not allowing to unmute. Okay, no problem. Okay. So let me see if I can ask to unmute. Let me see if you can unmute. See if you can unmute now. Yes, you are unmuted. Yeah, tell me. Are you able to speak now? Swanlata, you are unmuted. Anyways, I believe there's some problem. No problem. Okay, no problem. Yes.
Yes, sir.
Now, so participants are not able to speak, Ajit
Sir,
ji.
I think there is some issue to unmute the participants.
Okay, okay, no problem.
Okay, so yeah, sir, it will be resolved by today.
Okay, no problem. No problem. Yes, so you're absolutely right. This prior period line item is not required. Adjustment is required. Adjustment in the comparative period is required, right? Okay. Adjustment in the opening Ind AS balance sheet is required. Prior period item is not required. Just like accounting standard, it was required as a separate line item. So third, please make a note. Prior period item, separate presentation of prior period item is not allowed allowed in P&L is not allowed in P&L. Rather, in case of prior period errors, the comparative numbers needs to be restated and third balance sheet to be presented and disclosures as per Ind AS 8 has to be made. Okay, right? Okay. Then in our accounting standard IGAAP P&L, after this profit before tax and other item, there was extraordinary item and there was exceptional item also. There was extraordinary item and there were exceptional item also. What is meant by extraordinary item? What is meant by extraordinary items? What is meant by extraordinary items? Friends, The concept of extraordinary item does not exist in Ind AS. Why it does not exist in IFRS also? It only exists in accounting standard, IGAP, right? Extraordinary item means those items which are not within the ordinary activity of the entity, which are not arising within the ordinary activity of the entity. Okay, friends, extraordinary items are those items which are not arising within the ordinary activity of the entity. For example, loss of inventory due to fire, robbery of cash, embezzlement of cash. These are known as extraordinary item as per accounting standard, not as per Ind AS. So extraordinary items. Friends, Ind AS says that Ind AS came from IFRS. IFRS says that if you are doing a business, you will always have a risk, abnormal risk also, right? For example, loss due to earthquake. It is an extraordinary item. But in earthquake in Japan are very normal, right? So in IFRS, there is no concept of extraordinary, but in IGAP, the concept of extraordinary is there, which says that extraordinary items are those items which are not in the ordinary activity of the entity. For example, loss of inventory due to fire, robbery of cash, embezzlement of cash, loss due to earthquake, etc., etc. Loss due to earthquake, winning from lotteries, okay, winning from lotteries, etc. Okay, winning from lotteries, etc. Okay. So friends, then extraordinary item we discussed. What is meant by exceptional item? So extraordinary item are those items which are not in the ordinary activity of the entity. Exceptional item are those items which are in the nature of ordinary activity of the entity, but require a separate disclosure as exceptional due to the size and nature of the transaction. For example, a company is selling goods on a credit basis, and company is also creating provision for doubtful debt whenever company believe that it may go on as a bad debt. The company is also creating a provision for bad and doubtful debts. Okay. Friends, tell me, so whether this provision for doubtful debt, if the company is selling goods on credit, whether this provision for doubtful debt is extraordinary item or it is arising in the ordinary activity of the entity, whether it is within ordinary activity or outside the ordinary activity, this provision for doubtful debt, it is within the ordinary activity na. You are selling your goods on a credit basis, there will always be a risk of bad debt also, because you are selling on a credit basis, and might be you are charging some extra amount also, right? Probably if somebody would have purchased in cash, probably you would have made it cheaper, but now it is expensive because you are selling goods on credit. So one of the customer goes bankrupt. One of the major customer goes bankrupt. Okay. And the company has recorded a bad debt for that customer. Now tell me whether this bad debt is within the ordinary activity or outside the ordinary activity. If you are selling goods on credit, there can be bad debt also now, ordinary activity. But it was a material amount. It was a significant amount due to the size and the nature. So it is a material amount. The largest customer of the company become bankrupt. It is a significant amount. So it will be classified as an exceptional item, so that the user will be evaluate the result of the company separately. User will be able to know the result of the company. Okay, this time the profit is less. Why? Because there is a exceptional item. There is an exceptional item. Okay. Sir, if a company has faced a loss due to COVID, while it is not within the ordinary activity of the entity, no concept of extraordinary is there in Ind AS. So if company has incurred a loss due to COVID, right? So where that loss due to COVID is going to be presented? Friends, if the item is not material, if the impact is not material, then as an other expenses. But if the impact is material, then as an exceptional item. Then as an exceptional item, right? What was the example of this exceptional item? For example, provision for bad debt is a normal item in the ordinary course of business, but a huge loss on account of insolvency of one of the largest customer of the company requires a separate disclosure as an exceptional item. Friends, is that become clear or not clear to you guys? Please tell me. So extraordinary items, there is no concept of extraordinary items in the statement of P&L under Ind AS, right? It is prohibited. However, it is, however, it is separately required to be presented in IGAP, which is AS in IGAP. Okay, in IGAP. Point number 5. Exceptional items are required to be presented on the face of the statement of P&L, right? Okay, on the face of the P&L. Okay, so let me write this fact in the prior period item also, right? Separate presentation of prior period item is not allowed in case of prior period errors. However, it is required to be presented. It is separately required to be presented in the P&L. Is that clear so far, friends? Whatever I have covered so far, is that clear or not clear? Is that clear or not clear? Please tell me. Is that clear? So, extraordinary item is not allowed under Ind AS and IFRS. Prior period item is not allowed under Ind AS and IFRS. Exceptional item has to be shown separately on the face of the P&L. Okay. Then profit before tax. Then there is a current tax and deferred tax. And this is how we'll compute our profit after tax, right? Friends, I call it as a part 1. I call it as a part 1 P&L. This till this time, sorry, to till this line item, profit after tax. This is a IGAP P&L. This is a IGAP P&L. This is a accounting standard P&L till this line item of profit after tax. Now, a new line item started, a new section started. I call it as a part number. I call it as a part 2. Other comprehensive income. Have you heard about the word other comprehensive income? So in our accounting standard, in our IGAP P&L, we have the P&L till profit after tax only. We don't have the P&L extended after profit after tax. But now we have other comprehensive income also. Now we have an extended P&L, right? So there is a section called other comprehensive income. And the profit after tax plus other comprehensive income is known as a total comprehensive income. And then there is a line item earnings per share. So write another item in the notes. Point number 6. There are two sections. In the statement of P&L. Number 1 is PAT section and OCI section. Okay. PAT section and OCI section. Right. PAT section and OCI section. OCI concept is a new concept in Ind AS. Okay. This concept was not there in IFRS. This is a new concept in Ind AS. Okay. So friends, PAT plus OCI is equal to total comprehensive income, TCI, total comprehensive income, okay, which is TCI. The PAT plus OCI is equal to total comprehensive income, TCI. Now, discuss about the OCI. What is meant by OCI? What is meant by OCI? Okay. Other comprehensive income. Friends, if you see, you will find this OCI. OCI has two part. Item that will be reclassified to P&L, item that will not be reclassified to P&L. So before getting into this, let me explain what is meant by OCI, other comprehensive income. What is this other comprehensive income? Very limited guidance is available in the standard or material, but let me explain you why this concept of OCI exists in this Ind AS 1. Okay, let me explain that. Friends, first of all, OCI is an extended version of P&L. Right? Extended section of the P&L. Extended version, or you can write extended section of the P&L. Right? Statement of P&L का extended section है OCI. Okay. Now what is this OCI? In this is an extended version, extended section of the P&L. In the OCI, right? In OCI, the items in OCI is non-cash and notional in nature, right? The OCI items are coming from other standards, and few items of OCI are only there. For example, 10 items of OCI are there. Okay, right? The OCI is an extended version or section of the P&L. The OCI items are coming from other standards and few items of OCI are only there, like 10 items of OCI are there. Items in OCI is non-cash and notional in nature. Now let's understand the meaning of OCI first. Okay, other comprehensive income. What is this other comprehensive income? Let me explain you that why this OCI exists in Ind AS or IFRS. What is the background behind it? Friends, the word income and expense, what are the element in the P&L? I have told you 5 element of the financial statement. What are the 2 element in the P&L? भाई P&L के 2 एलिमेंट कौन से हैं? बहुत ही सिंपल सा क्वेश्चन है. Income and expense. Thank you, Rohan. Income and expense. Income and expenditure, income and expense. What is the definition of income? Coming from the framework, what is the definition of income? Income means increase or decrease income. Income means increase in net assets. Okay. Increase in net assets from a transaction happening with a party. Increase in net assets from a transaction happening with a party who is not a shareholder, non-shareholder. Transaction happening with a party who is not a shareholder, right? If a transaction which is happening with a party who is not a shareholder and it results in increase in net assets, then it will be called as an income. What is meant by expenses? Decrease in net assets from a transaction which is happening with a party who is not a shareholder is known as an expense. Okay. So income means increase in net assets resulting from a transaction. Increase in net assets resulting from a transaction happening with a party who is not a shareholder, other than shareholder, right? What is meant by net assets, sir? What is meant by net asset? Net assets means total assets minus total liabilities. Net assets means total assets minus total liabilities. Net assets means total assets minus total liabilities. Assets minus total liabilities. Total assets minus total liability. Net assets means Net assets means shareholders funds. Shareholders funds. Net assets means shareholder funds. Total assets minus total liability. Total asset side of the balance sheet minus total liability is equal to equity. Equity plus other equity, right? So that is the net assets. My dear friends, from payment of dividend, tell me, from payment of dividend, whether your net assets will increase or decrease. भाई डिविडेंड पे करेंगे तो क्या होगा? शेयर होल्डर फंड्स कम हो जाएंगे, कैश चला जाएगा, शेयर होल्डर फंड्स कम हो जाएंगे. यस, टेल मी, फ्रॉम पेमेंट ऑफ डिविडेंड वेयर योर नेट एसेट्स विल इंक्रीज और डिक्रीज. Retained earnings to Kanhaiya, how can it there will not be any impact from payment of dividend? Retained earning account debit to bank, retained earning to dividend, dividend to bank. शेयर होल्डर फंड्स में क्या आता है? रिटेन्ड अर्निंग आती है ना. सी कन्हैया, this is your balance sheet. In balance sheet, on one side there are assets, then there is an equity, there is a liability. Okay, so assets minus liability is equal to equity, right? So when you pay dividend, your retained earning will decrease, so shareholder fund will decrease, net asset will decrease, or alternatively your cash will go out, right? So technically net assets will also decrease, from this formula also. Yes, so net assets will decrease. So there is a decrease in net assets. Is it meeting the definition of expense? Party. Who is the party with whom this transaction is happening? This transaction is happening with the shareholder, right? Is it meeting the definition of expense? No, it is not meeting the definition of expense. ये expense की definition meet नहीं कर रहा है. It is not meeting the definition of expense. Okay, no, not meeting the. If it is not meeting the definition of expense, will it become part of a statement of profit and loss? Answer is no. Where it will go? It will go to the statement of changes in equity, in the retained earnings movement, in the reserves and surplus movement. Right issue. By making a right issue, whether your net assets will increase or decrease, your net assets will increase. Of course increase होंगे ना, आपकी equity बढ़ जाएगी. Your equity will increase, your net assets will also increase ना. Increase. Okay, who is the party? Shareholder. Whether this is meeting the definition of income. Is it meeting the definition of income? No, not meeting the definition of income. So where this right issue will go? This right issue will go to the statement of changes in equity, increase in the share capital, movement of the share capital. Revaluation surplus on fixed asset under Ind AS 16. As per Ind AS 16, revaluation surplus of fixed asset. If you have done the revaluation of fixed asset, whether your net assets will increase or decrease, net assets will increase. आपका फिक्स एसेट का बैलेंस बढ़ गया ना? Yes or no? Revaluation surplus on PPE, whether your net assets will increase or decrease, or no change, your net assets will increase on PPE, right? Whether this party is a shareholder, whether this revaluation has been done with a shareholder, answer is no. It's a market based value, it's a fair value, market based value, not a shareholder. Not a shareholder. Okay, so friends, is it meeting the definition? Tell me, is it meeting the definition of income? जो मैंने आपको इनकम की डेफिनेशन बताई, मीट करता है या नहीं करता है? यस, मीटिंग द डेफिनेशन ऑफ इनकम. Increase in net asset is there, not with the shareholder. It is meeting the definition of income. Friends, if it is meeting the definition of income, right, should I take it in the other income? Should I take it in the other income? Yeah. Should I take it in the other income and should I distribute dividend on this also? What do you say? Hand on heart, what will you say? Is it an income? Going by the substance, is it an income? This is like a reserve. तो क्या करूं मैं इसको इनकम में ले जाऊं? डेफिनेशन तो मीट कर रहा है. It is meeting the definition of income. Should I take it into the P&L? Sir, I should take it in the statement of P&L, but where? In the other comprehensive income. So, in the other comprehensive income, right? In the other comprehensive income. That is why, my dear friends, this other comprehensive income items are coming from other standard. Ind AS 16 tells you that when there is a revaluation surplus of PPE, it has to go to other comprehensive income, right? And as I told you, item in OCI is non-cash and notional in nature. Items of OCI are similar to reserves in nature, right? Similar to reserves in nature. So that is why I'll show it as a where? I'll show it as a part of other comprehensive income, and that is why, my dear friends, the earning per share which I am showing, the earning per share is not on total comprehensive income. The earning per share is also computed on profit after tax. ये अर्निंग पर शेयर भी किस पे निकाल रहा हूं? अर्निंग पर शेयर प्रॉफिट आफ्टर टैक्स पे निकलता है. अर्निंग पर शेयर इज नॉट कंप्यूटेड ऑन द आइटम इंक्लूडिंग ओसीआई. नो, अर्निंग पर शेयर इज कंप्यूटेड ऑन पैट, नॉट टीसीआई. Right? You can see earning per share is computed on the profit after tax, not on the total comprehensive income. Right? Why? Because these are the reserves in nature. These are not available for distribution as a dividend. These are coming into the statement of profit and loss as a separate bucket, other comprehensive income. Why? Because they are meeting the word definition of income and expense. Right? And the respective standard, like for PP in DAS 16, it says that you have to take this item to other comprehensive income. Sir, how many item of other comprehensive income is there? So there are few standard which talks about the accounting treatment as a OCI, and there are total 10 items in OCI, 9 to 10 item in OCI, right? Foreign currency translation reserve, my dear friends, foreign currency translation reserve in accordance with Ind AS 21. So the company has a subsidiary, foreign subsidiary. The company is consolidating the foreign subsidiary and translating the US dollar balances into INR balances. Now what happened? While translating from US dollar balances to INR balances, the company has a foreign currency translation reserve losses, FCTR negative, right? So this foreign currency translation reserve, which is negative, the loss, right? Of course, it is a negative reserve. So whether your net assets will decrease, answer is yes. Is it a transaction with shareholder? No. Is it meeting the definition of expense? Answer is yes. Meeting the definition of expense, yes. Are you getting me? This foreign currency translation reserve, you will read this concept in Ind AS 21. Friends, this foreign currency translation reserve used to take in reserve in accounting standard. Should I take this foreign currency translation reserve in other expenses here? What would you say? Expense की definition meet करता है तो क्या करूं? Expense में ले लूं? Should I take it in the expense? No, I should not. So where should I take? I should take it into the other comprehensive income, a foreign currency translation reserve, other comprehensive income, right? So it is just like a reserve in nature. I have to take this into the OCI, right? So friends, now the deferred tax on OCI items has to be recorded in OCI only. Friends, when you read Ind AS 12, you will find that the deferred tax is required to be created on the temporary differences. So if there is a revaluation surplus, there is a foreign currency translation reserve. So there will be a deferred tax impact also. For example, 30% is the deferred tax rate. So there will be a deferred tax impact also. So this deferred tax has to be shown along with each line item, okay, in the OCI only. Is that clear? Is that clear, my dear friends? Yes or no, please tell me. Yes or no, please tell me. Is that clear, not clear? This is like theoretical, this is little bit theoretical. That is why I'm making a note so that you will be able to understand. And with the help of income and expenses definition, now you guys have understood why the concept of OCI exists, why there is a separate bucket which is given to the statement of profit and loss, right? So that the earning per share is calculated right, so that these kind of kitty can be seen by the shareholder user of the financial statement separately. The company cannot mix and the company cannot manipulate also, right? Friends, now this OCI item has been divided into two parts, right? Number one, item that will be subsequently reclassified to P&L, item that will not be subsequently reclassified to P&L. What does it mean? When I say that item that will be subsequently reclassified to P&L, sir, ये P&L ही तो है. This is a OCI section. Which P&L section it is talking about? Have you seen this part 1 and part 2? आपने ये पार्ट 1 एंड पार्ट 2 देखा? ये पार्ट 1 क्या है? सर, दिस पार्ट 1 is a normal P&L which we used to prepare draft audit, right, since our childhood. So friends, item that will be subsequently reclassified to P&L means at the time of disposal. For example, you have created a foreign currency translation reserve on a foreign subsidiary. Now you have sold the foreign subsidiary in the next year. So you created a FCTR. Now you sold, you disposed of the foreign subsidiary. What should you do with that FCTR? If that foreign subsidiary on which you have created an FCTR, if that foreign subsidiary has been disposed of, whether you should dispose of the FCTR also or not, or you should keep continuing with the FCTR for ages in your balance sheet. You should dispose of ना. Dispose of करेंगे नहीं करेंगे FCTR को बताइए. Yes, dispose of. So this FCTR is coming as a OCI reserve. This OCI reserve has to be shown separately in the balance sheet. Okay. In the statement of changes in equity, this OCI reserve will come separately. See, this is a statement of changes in equity. This is retained earning. This is OCI, FCTR, OCI revaluation surplus, other item of OCI also. This has to be shown like that. General reserve, capital reserve, etc. Security premium. This has to be shown like that. The statement of changes in equity. This is the reconciliation of statement of changes in equity. So the point is, when you will dispose of the subsidiary, you have to de-recognize your FCTR also. So it is coming as a OCI reserve. So where it will go? It will go to the P&L. If foreign currency translation reserve is a positive balance, what you will do? You will debit FCTR, credit other income. It will go to the part 1 of the P&L. Is that clear? Is that clear? So what is the accounting entry? Foreign currency translation reserve, OCI reserve account debit to other income. Balance sheet to P&L. This OCI reserve is a balance sheet item. It will go to P&L as other income. Now, item that will not be subsequently reclassified to P&L, iska ulta. Item that will not be subsequently reclassified to P&L. What does it mean? It means at the time of disposal, the OCI will be recognized in retained earning directly in balance sheet. The OCI will be recognized in retained earning directly in balance sheet. At the time of disposal, the OCI will be recognized in retained earning directly in balance sheet. Right? So it is a balance sheet to balance sheet entry. It is a balance sheet to balance sheet entry. Balance sheet to balance sheet entry means, for example, the company has created a revaluation surplus on a PP. Now that PP has been sold out, the building has been sold out, right? So this revaluation surplus has to be reversed. How will you reverse? Revaluation surplus OCI reserve account debit to retained earnings, balance sheet to balance sheet transaction. To retained earnings, balance sheet to balance sheet transaction. So my dear friends, these items, from where these items are coming, when you read the respective standard, you will be able to know that, okay, this revaluation surplus of PPA has to be gone to the OCI. Foreign currency translation reserve has to go to the OCI. At the time of disposal, this will go to P&L. This will not go to P&L. Okay. This will be routed through P&L. This will not be routed through P&L. So these two subsections are given for other comprehensive income. As per the accounting treatment given in the respective standard, you have to remember, you have to learn what items are items that will be subsequently reclassified to P&L, what are the items that will not be subsequently reclassified to P&L. I will give you the notes. In the notes, I will show it separately. What are the items which is reclassified to P&L, not reclassified to P&L. You will be able to learn those items in the respective standards. Is that clear? This is the concept of OCI. This is the concept of OCI. Let me write in the notes. In OCI section, the items of OCI are classified as items that will be subsequently reclassified to P&L and not reclassified through P&L and not reclassified through P&L. Okay. And not reclassified through P&L. I hope it is clear to each and every one of you, my dear friends. Let me show you the balance sheet, the financials, the P&L of the listed company, Indigo Airlines. Can you see the P&L of Indigo Airline? I hope it is visible to everyone. Are you able to see the P&L of Indigo Airline? Yes. You can see standalone statement of profit and loss, income, expenses, profit before tax, right? Profit before tax is there. Tax expense, profit for the year, profit after tax. Then there is other comprehensive income, item that will not be reclassified to P&L, item that will be reclassified to P&L. Okay. Then there is a total of other comprehensive income. Then there is a total comprehensive income, and earning per share has to be calculated on the profit after tax, not on the total comprehensive income, right? Let's go to the statement of changes in equity. You can see in a statement of changes in equity, they have given the equity share capital movement, which you are also giving in your accounting standard IGAP notes to accounts. So opening balance, changes in equity, closing balance, number of shares, amount. Then they are giving the other equity reconciliation. So reserves and surplus like retained earnings reconciliation, other comprehensive income reconciliation, right? And the total reconciliation. This is the statement of changes in equity. This is the statement of changes in equity, right? So friends, you can see we have already covered these items, right? So these are the items that will not be reclassified to P&L and items that will be reclassified to P&L. And you can see I have already mentioned the name of the standards, Ind AS 109, 109. The statement of changes in equity we have seen, it's a movement in the equity share capital and reserves and surplus. Okay. Now coming to the notes, where is the, yes. So talking about the cash flow statement, the cash flow statement has to be prepared in accordance with Ind AS 7, Ind AS 7. Okay. Talking about the notes, friend, this standard is a very meticulous standard, very structured standard, right? So before that, do you have any question? Do you have any question, my dear friends? Sai Kiran, do you have any question? Swanlata, Kanhaiya, Rohan, Charita, Aruna, Ravinder, Manoj, any question up to this level? Please let me know, guys, if you have any question. Yeah. Have you understood the statement of P&L?
Hello,
Yes.
sir.
Yes. Yeah.
Sir, for the OCA items to disclose in the statement of changes in equity, for each OCA reserve, we need to maintain a separate disclosure in a statement of changes in equity, sir.
Yes, it has to be subsection wise. For example, in OCI item, there are two subsections. What are these two subsections? Item that will be subsequently reclassified to P&L and item that will not be subsequently reclassified to P&L, right?
Yes, sir.
So this has to be subsection wise, like I have shown you in my Excel file. So basically, let's say item that will be subsequently reclassified to P&L has 3 items. Item that will not be subsequently reclassified to P&L has 4 items. Okay, right?
Okay, sir.
So you can consolidate all the item relating to subsequently reclassified to P&L, subsequently not reclassified to P&L, and you can show these two sections: subsequently reclassified, not reclassified. Okay, only 2 columns, not 7 columns. Clear, Manoj? Okay. Yes, now coming to the notes to accounts. Friends, this standard talks about the structure and content It says that notes. The notes shall present information about the basis of preparation of the financial statement and the specific accounting policies. The notes talk about that you have to give the basis of preparation and the material accounting policies, right? The notes shall give you the what? The basis of preparation and the material accounting policies. Let me show you in the Indigo Airline annual report. You can see the statement, the basis of preparation. Can you see the basis of preparation? Basis of preparation. Under the basis of preparation, they have given the statement of compliance, basis of measurement, critical accounting estimated judgments. Then they have given the material accounting policies. Okay. So the notes shall present the information about the basis of preparation of the financial statement and the specific accounting policies, material accounting policies. Disclose the information required by Ind AS. Disclose the information required by Ind AS that is not presented elsewhere in the financial statement. Disclose the information required by Ind AS which is not presented elsewhere in the financial statement. Means, what could be the information which is required to be disclosed by Ind AS when which is not presented in balance sheet, P&L, cash flow, and statement of changes in equity? What can be those statements? Tell me. What can be those disclosures? Guys, you know those disclosures. What are those disclosures? Contingent liability, related party disclosure, segment reporting, actuarial related disclosures. These are specifically required by Ind AS. Is it disclosed in balance sheet, P&L, cash flow, statement of changes in equity? No, right? Okay. So these disclosures are specifically required by Ind AS. So those disclosures are required to be made. Provide information that is not presented elsewhere in the financial statement, but relevant to an understanding of any of them. What does it mean? Friends, the company has a 50,000 crore rupees of PPE. The company has 50,000 crore rupees of PPE, right? The company has mortgaged this PPE to the bank and taken a loan. So whether this information of the mortgage, whether this information is important for the user of the financial statement to understand or not? Tell me yes or no. As a user of the financial statement, for example, you chartered accountant are shareholder. Whether you want to know or you don't want to know whether the assets are freehold assets or assets are mortgaged with a financial institution or bank. It is important to know. Right? So any information which is not presented elsewhere in the financial statement, but relevant to the understanding of any of them is required to be given. Then this standard is such a meticulous standard. It also talks about what should be the kind of hierarchy in which these notes are going to be presented. So notes shall be presented in a systematic manner. Like first of all, statement of compliance has to be given. Then summary of material accounting policy. I have shown you. The corporate information was there. Then basis of preparation. In the basis of preparation, statement of compliance was there. Then material accounting policy information was there. Then supporting information. What is meant by supporting information? Supporting information, for example, if you see the balance sheet and P&L, in every balance sheet and P&L, it is guided by some note reference. Can you see the balance sheet and P&L? There is a note reference in the balance sheet 3, 4, 5, 6, right? So supporting information of balance sheet and P&L in the order in which each statement is presented. So always the balance sheet breakup comes first, then P&L breakups. And other disclosure like related party, capital commitment, contingent liability, etc., are required to be disclosed, right? Friends, then companies are also required to disclose critical management judgment and estimates, right? For example, substance over form issues, sale of goods or financing arrangement, existence of control over a special purpose entity. These are just examples. Critical estimate like recoverability of internally generated intangible asset, impairment of goodwill, useful life of property, plant and equipment. Friends, in addition to contingent liability and contingent assets, in addition to the accounting policies, the company is also required to disclose critical management judgment and estimate. Let me show you. if you see, this is a material accounting policy information. And before that, the company has given critical accounting estimate and judgment. Are you able to see it? They have given, in preparing these financial statement, management has made judgment, estimates and assumption, because every item is not an accurate item in the balance sheet. Friends, the net block of PPE, the PPE net block, tell me, is it an accurate item or is it a best estimate? The net block of the property, plant and equipment in the balance sheet of listed company, is it an accurate item? Is it an accurate number or best estimate number?
Best estimate number.
Very good. It is a best estimate. Why? The cost is accurate. But why net block is a best estimate? Why net block is the best estimate?
Because of the depreciation.
Because of the depreciation. Very good. Because of the depreciation, right? So gross block minus accumulated depreciation, and depreciation is an estimate. Why? Because it is on the basis of the useful life. It is on the basis of expected consumption pattern of the asset. Okay. So friends, if you are giving a PP accounting policy, very good. But you are also required to disclose the critical management judgment and estimates. Okay. So you can see this company has given lot of judgment and estimate. Note number this, fair value measurement of financial instrument, measurement of useful life of fixed asset. So provision for gratuity, key actuarial assumptions, right? Judgment required for provisions. Okay, so many items, contingent liability, deferred tax asset. For so many items, they are applying judgment and estimate. To cut a long story short, the companies are required to disclose critical management judgments and estimates also, right? Then what is the Indian presentation for Ind AS financial statement? Ind AS compliant Schedule 3 to Companies Act 2013. Notified by wide MCA notification dated 6 April 2016. Which division? Which division? Division 2. Division 2 of Schedule 3, right? Now let's discuss comparison between Ind AS and AS. If I discuss comparison between Ind AS and AS, in Ind AS it is Ind AS 1. Sorry, Ind AS 1. In accounting standard it is AS 1. SOCI requirement, while SOCI is shown as a separate component in the Ind AS, in the Ind AS financial statement. For example, this statement of changes in equity, if you see the listed company balance sheet, this statement of changes in equity, if you see the statement of changes in equity, this is a statement of changes in equity. Like your balance sheet and P&L, like your balance sheet and P&L and cash flow, this statement of changes in equity is required to be signed by the statutory auditor and the entire board of directors of the company, right? But in accounting standard, this statement of changes in equity was not required as a separate component. It was part of the notes to accounts. The concept of OCI was not there in IGAP, but it is there as a part of the P&L in the Ind AS financial statement. Extraordinary item is not required under Ind AS. It requires a separate disclosure in accounting standard P&L. A statement of compliance is required to be given. No such requirement of statement of compliance. Key source of uncertainty, management judgment and estimates, these are required to be disclosed in Ind AS financial statement, but in IGAP, these disclosures were not there. Third balance sheet requirement is there in Ind AS, right? Whereas third balance sheet requirement is not there. In IGAP, there was a retrospective calculation but prospective application. But in Ind AS, there is a retrospective calculation and retrospective application also, right? So friends, this was all about your Ind AS 1. This was all about your Ind AS 1 presentation of financial statement. Do you have any question? Happy to answer. If you don't have any question, then we'll be happy to conclude it.
Sir, for the third balance sheet, does notes also to be given for all 3 years, notes to accounts?
Yes, for this third balance sheet, notes to accounts, only balance sheet related notes to accounts. Okay.
Okay, sir.
Because there is no
For
third
the
P&L. Okay, there is no third P&L, right? Okay. Any other question, my dear friends? Yes, I will share the notes today itself. So thank you so much. If you don't have any question, let me conclude the session. Thank you so much. Wish you all the best and have a learning sessions ahead. Thank you. Session over. Any question from anyone? Okay, no question. Okay, session is over. Thank you.
Recording stopped.